Good morning, students. I am C. Ankit Sharma, your income tax faculty for today's session again. So I welcome you all in our today's session that is for capital gain, and this is our third session in which we will be discussing some more special provision regarding capital gain, and I guess we will able to complete our assignment number 1 of capital gain, or we can say part 1 of capital gain, that is for 45 pages notes, which we were studying from last two sessions also. So in the last two sessions we discussed the basic of capital gain, like section 45, that was a charging section of capital gain. Then the definition of capital asset, the definition of transfer, the definition of long-term capital asset and short-term capital asset, the indexation concept. After that, we discussed the cost. That we discussed the special provision of the section 47, which defines cases in which transfer will not be regarded as transfer. There was almost 15 cases in which the starting 12 cases having the same clarification or treatment for numerical purpose, 13 regarding the reverse mortgage, which is going to be exempted, of course. And then that is point number 14 and 15, which talks about the conversion concept of debenture into shares or preference shares into equity share, etc. Okay. We discuss how to solve these 15 cases. In between, we discuss also the amalgamation definition, the demerger concept also. Then we discuss the advance money forfeited under section 51, which says if any advance money has been forfeited by SSC, then it's going to be taxable as income from other source. We were discussing the special cases in which the capital gain will not be taxable in the year of transfer. The basic section, section 45 says that capital gain will be taxable or chargeable to tax in the year transfer took place. That section 45 says, but there are some exceptions in which the chargeability of capital gain will be deferred. That means the taxability will be deferred to some other time, but transfer will be on some other date, as in case of conversion of capital asset into stock in trade. That is section 45, section 2, subsection 2. So it explains that there are certain cases in which we will defer the chargeability of capital gain. So if I am having some capital asset and if I convert them into stock in trade, so the stock in trade conversion year will be called as transfer year. So capital gain should be taxable in that year. But because there is no actual inflow of cash or money, so income tax deferred the chargeability in the year in which stock in trade is going to be transfer or sale. So that was a recap of our episodes, and today we will start a new episode of our class. That is our new session, session number 3 of capital gain. So good morning again, and Suprabhat, and Namaskar, and Vadakkam, and Sat Sri Akal, Subha Bakhair, Kem Cho, Yasakai, etc., etc. So winters are here, of course. And good morning wishes from Miss Kiran Parthrana. I am trying my best every day. Well done. That's what you should do. That's it. If you are trying your best every day, you will going to be successful in your life very soon. Miss Monica, Hemlata, Pooja, Kadambri, Kalasevi, Mohammed, Pranditya, Miss Santige, Aniradha, Tanisha, Kokinati, Bala Murali Krishna, Akram Ansari, Vaishali, Ninad, Shreyas, Chandra Prakash, Miss Chandra Prakash Singh, Mamta Yadav, Swati, Komal, Sayan. Somebody was asking something. Ninad Desai is asking, sir, income from stock market trading, is it not PGBP? It depends upon your frequency of transaction. If you frequently deal in stock market on regular basis, so that can be your PGBP income. But if you deal for investment purpose and it's not a frequent transaction, then it will be your capital gain income. So there, that is depend upon your frequency of transaction. Okay. Next is Rasmita. Okay. Swaroop, good morning. Vaishali, good morning. Retro, Aradhana, Navneet, Tumpa Sen. Okay. This name I am seeing first time. Srinivasan Venkatraman. Hi, sir. Happy morning. Okay, so a very happy and knowledgeable morning for you because today we will be discussing some more provision regarding capital gain. So those join first, those are actually joining or taking the class first time. So let me tell you that this is our third session of capital gain. So if anybody is going to join from today, I suggest them, I request them, kindly watch the previous classes of capital gain. So that is going to help you a lot to understand the provision, what we are going to discuss from today. Okay. So there will be an MCQ also today. And please, you should have a paper, pen, or calculator. I will take the MCQ after 30 or 40 minutes. So you will arrange your calculator, pen, and paper also. So let's start the provision from today. In the last class, we completed the provision regarding conversion of capital asset into stock in trade. So we were discussing cases in which the chargeability year is going to be deferred due to genuine reason. Of course, in case of compulsory acquisition, in case of conversion of capital asset into stock in trade, the chargeability is deferred to that year in which we will receive the actual consideration. That means in the year in which stock in trade is going to be transferred. We have discussed the provision regarding it. Okay. The second special case, in this case also, the chargeability has been deferred. So transfer will be in some other year, but the taxability or chargeability is deferred to some other year. And it says destruction of capital asset. In the definition of transfer under section 247, the first point was sale, exchange, and relinquishment. And relinquishment covers waiver of right as well as the destruction of asset in which you have insured that asset. So if the insurance is there, in that case, we will calculate the capital gain in case of destruction of capital asset. Clear? So destruction means destroy. तो अगर कोई कैपिटल एसेट है जो डिस्ट्रॉय हो जाती है by fire, accident, etc., that's called destruction, and we need to charge the capital gain in that case also. The provision says capital gain arising on destruction of a CA, not chartered accountant, that is capital asset, of course, will be chargeable to tax in the year in which the insurance compensation will receive. But period of holding will be taken from the date asset acquired till the date of destruction. So all the provision will be applicable till the date of destruction. Only the chargeability year will be changed. Same as in case of conversion of capital asset into stock in trade. In a short example, suppose Mr. A purchased an asset, suppose a house for rupees 10 lakh on 1st October 1995. FMV on 1st April 2001 has been given in question, rupees 12 lakh. This asset has been destroyed on suppose 1st of July 2015. So destruction is equivalent to transfer. But technically insurance compensation has not been received in this year. So how he will be able to pay the tax? So in this case, again, transfer year will be 2015, but the chargeability year will be the year in which we are going to receive the compensation. So suppose question says compensation received, whether in cash or in kind. If it is in kind, we will take the FMV of the asset we received. So compensation suppose received on 1st July 2023. So what we just need to do, we need to take the assessment year as per the compensation received year. That means 24-25. Now, as in the case of conversion of capital asset into stock in trade, we just need to take details from up to this transfer date. We just need the year in these cases. Everything else will be taken from this time duration to this time duration. Like if I'll ask what should be the period of holding, it will be from 1995-2015. If I'll ask the sales consideration, then the sale consideration will be the amount received as compensation. Suppose it has received the compensation amount rupees 35 lakh. So we will take the sale consideration 35 lakh. Now less cost of acquisition will be, because the asset has been purchased before 1/4/2001. So we will take the purchase price or FMV, whichever is higher. That will be 12 lakh. Transfer year index will be taken over here, and that will be as per this 2015-16 transfer year index will be taken over here, and for the purpose of division we will take 100, because if asset has been purchased before 1/4/2001, then we need to take the index for the purpose of division, that is should be 100. That will be your index cost of acquisition. That will be your answer. So in same as per conversion case, you just need to take the assessment year as per the year in which the compensation or stock in trade has been transferred. All other provision will be applicable as the asset has been, till the date the asset has been regarded as transfer. So where any person receive any money or other asset under any insurance from an insurer or account of damage or destruction as a result of flood, typhoon, hurricane, cyclone, earthquake, or other convulsion of nature, rights or civil disturbance, etc., they all will be treated as transfer. So any profit or gain arising from receipt of such money or other asset shall be chargeable to income tax under the head capital gains, and shall be deemed to be the income of the such person for the previous year in which such money or other asset was received. I hope it's clear. Easy provision, of course, very simple. In order to compute capital gain, the value of any money or the FMV of the other asset on the date of such receipt shall be deemed to be the consideration. Here is the numerical treatment. Transfer year will be the year of destruction, but capital gain will charge in the year money received or asset received against such destructed asset. Sales consideration, of course, will be the money received or FMV of asset, and the cost of acquisition, index cost of acquisition, improvement, etc. provision will remain as in normal case. Now, very important section in this category is section 45.5. Again, this is again a section in which year of transfer will be some other year, and the chargeability year will be some other year. So this is the third special case. The first was conversion of capital asset into stock in trade. The second was destruction of capital asset. Now this is third, and I guess the most important in this kind of scenario in which chargeability year is different from the transfer year. And it says compulsory acquisition under section 45.5. So if you have any property like building, land, etc., any asset, and if government wants to undertake it, if government wants to acquire it due to some, as government is, suppose government is making a new road, new highway, new airport, any dam, etc. So for that purpose, if your property is going to be acquired by government, then government will pay compensation for that. That compensation will be my sales consideration. But if this kind of compulsory acquisition has been done by the government, then it will regarded as transfer. Again, in the year in which this acquisition is going to be done, that is the transfer year. But it is not necessary that we are going to receive the compensation in the same year. Order will be passed that you will be provided some consideration regarding this, but that consideration or compensation receiving year, actual receiving year, might be delayed. That might be some other year in comparison to the year in which the compulsory acquisition took place. So again, we have to defer the chargeability to that year in which we are going to receive the compensation. So अगर ऐसा होता है कि गवर्नमेंट कभी आपकी प्रॉपर्टी को कंपल्सरी एक्वायर्ड करती है, रोड बनाने के लिए, ब्रिज बनाने के लिए, एयरपोर्ट बनाने के लिए एटसेट्रा और हाईवे, इन दैट केस गवर्नमेंट कंपनसेशन आपको देगी, and that will be going to be chargeable as per the provision on section 45(5). Okay, so if any CA is compulsory acquired, that means capital asset, of course, under any law, then it amounts to transfer and chargeable to capital gain. But capital gain will be calculated in the year in which OC or EC is received. Now, what is OC or EC? OC refers original compensation, which is decided at the starting. And EC is enhanced compensation. That means increase, that means extra, that means enhanced compensation is received. So let me explain this provision with the help of an example. It's a huge example because this section 45(5) consists multiple cases, and it's very important because it's quite difficult, or we can say quite huge provision. So it's more important for the purpose of examination. But it's easy, not that difficult. We just have different circumstances. That's it. Okay. Suppose there is an assessee, Mr. Batman. Clear? He purchased a land on 1st October 2010 for rupees 10 lakh. Clear? Then this property has been compulsory acquired by government, suppose on 1st October 2019. Okay, so that will be my transfer year, of course. And government decide that the compensation will be, government did not pay that compensation in this year, but they decided that compensation will be, suppose, 70 lakh. So the starting compensation, which is decided by the government at the time of compulsory acquisition, that compensation is generally called original compensation, which is originally decided. Okay, so that is called original compensation. In short, we call it OC. So the OC is 70 lakh, which will be received by the assessee in later year. So in the year 2019, the transaction is regarded as transfer. As per the definition of transfer, there was point number 3, which talks about compulsory acquisition under any law, section 45(5), in the definition of transfer. And I told you that we will discuss this provision in detail later. So that is the transfer. Here is the capital asset. So capital gain should be charged in the year of transfer. But because we do not have money to pay the tax, because this money we will receive later. So again, the chargeability year has been deferred in this case. Now suppose in this example, out of 70 lakh rupees OC, rupees 50 lakh OC received on 1st October 2023. So we will charge the capital gain in this year, in the year in which OC received. Now the special provision says that the full OC, that was 70 lakh, but we just received 50 lakh. But we will going to tax the full value of OC, whether it received full or in part. So always remember, even if 10 lakh has been received in this year, we need to taxable the full 70 lakh rupees as the original compensation for the purpose of capital gain. So in the year of chargeability, we will write computation of capital gain in the hands of Mr. Batman, that means assessee for assessment year 24-25. Now, first of all, period of holding. I always say, just forget about this information. All the details will be taken from the year of transfer. So period of holding will be from 2010-19. That will be a long-term capital asset. Then the sales consideration will be 70 lakh. Even we just received 50. But the provision says that if any part of OC has been received, whether full or in part, we will taxable the full value of original compensation. So that provision has been made in the income tax provision. Now sales consideration will be 70 lakh. All other provision will be as per normal provision as we apply. Less index cost of acquisition. Of course, 10 lakh will be the cost of acquisition multiplied by the year of transfer. That will be as per this information, not 348 always. That will be previous year 19-20 index that will be given in question, and 2010-11 index for the purpose of cost. So that will be my index cost of acquisition, and this is going to be my capital gain or loss. Remember, out of this 70 lakh, we just received 50 lakh. Clear? We just received 50 lakh rupees. So 20 lakh is going to be received later, maybe next year or after, practically. But because we taxable the full value in the year in which part or the full consideration of OC received. So we received only 50, but we taxable full 70 lakh. So when we will receive the balance 20 lakh out of this value, whenever we are going to receive this balance 20 lakh rupees, practically, that is in that year, it's not going to be taxable because we have already taxed the full value of consideration in this year. So whenever we will receive 20 lakh rupees in future, that is not going to be taxable, no treatment. And why it's not taxable? Because we already taxed the full value in the previous year 23-24 or assessment year 24-25. Till this provision, everything is clear. We are not doing anything extra. The same concept, the chargeability year will be different. We have to take the full consideration. This provision, you should understand that even if we receive 5 lakh out of this 70, we have to take the full consideration 70 lakh in the assessment year 24-25. Whenever the balance amount will be received, that is going to have no treatment under income tax. Clear? So that was the first part of this provision, section 45(5). First part is this. Now the second part we are going to discuss. The second part means that there might be some further information also regarding it. And it's happened. Suppose government decided the consideration will be 70 lakh. And government has paid that consideration. We are going to taxable that consideration like this. But practically what happens, generally, that sometime assessee is not satisfied with this 70 lakh compensation. Assessee says this 70 lakh is not enough. The compensation should be higher than that. So suppose assessee went to the court and filed an application that my compensation should be some extra amount also. It should have more 25 lakh rupees also. So that's called EC, that is called enhanced compensation. So assessee went to the court, then the department went to the court, the department which acquired this property. After that, court decided that there must be extra compensation EC, and suppose the court decided 22 lakh. Assessee asked for 25 lakh, but as per the discussion, court decided yes, the consideration should be some extra amount also above 70 lakh rupees, and court decided that 22 lakh rupees extra should be EC, that's called enhanced compensation, and the order has been given by the court. Suppose the date is on 1st October 2026. Court decided that there should be some extra compensation, and that is 22 lakh rupees. Now this is my bonus. This is kind of an extra amount which I am going to have as a compensation. That is also going to be taxable as capital gain, and the year will be this. So for assessment year 27-28, we need to calculate the capital gain again. The capital gain in the hands of Mr. Batman, same provision for assessment year 27-28. The best part is you need not to calculate any period of holding. You just need to take the sale consideration, which is the EC, enhanced compensation as sale consideration. You can deduct only one thing out of this, that is expenses on transfer. If any expenses has been paid for this case, that expenses on transfer can be deducted only. So after that, there will be net sale consideration. The best thing, you need not to deduct any cost of acquisition, index cost of acquisition, etc. Nothing. That always be zero. So this full value will be your capital gain, and that will be long-term capital gain. Why long-term cap gain? Because the original gain nature will be same in this EC capital gain nature. If the original is short-term, then this will also treated as short-term. So whatever will be the nature of original gain, that is going to be taxable as the nature of this EC. So we need not to calculate any period of holding. Why we need not to deduct any cost? Because the full cost of acquisition has been deducted already when we calculated the original gain on the basis of original compensation. So in case of EC, only the expenses on transfer can be deducted. There cannot be any cost of acquisition or improvement, because that has already been deducted at the time of calculation of original compensation capital gain. So in this kind of question, there will always be a compulsory acquisition. There will always be received of original compensation. And the question will also suggest that there is some extra compensation, that is EC, and that is going to be taxable in the year in which the court passed the order, final order. And only the sale consideration is going to be taxable as the capital gain, no period of holding, no indexation, no cost need to be deducted. Only expenses on transfer can be deducted. Clear? So we can say that section 45.5 solution having, this is first part, this can be the second part. Third is yet to come. In this kind of question, there can be a situation in which the third case can be like this. Suppose question says that suppose the court. Assessee went to the court. Suppose the court disallow any EC. Court say no, you won't receive any extra compensation or enhanced compensation. So this 22 lakh rupees, suppose in the above question, court decline the extra compensation and court reduced the original compensation. Court says that you received 70 lakh rupees earlier. That is also wrong. The original compensation should be only, suppose court says 55 lakh. So the original compensation which was decided 70 lakh, that is reduced by the court. Suppose this happened. And question might say that suppose it was 70 lakh, then situation 2, it can say that the extra is 22 lakh. And suppose third case has been framed in question. Then suppose what? If the court disallowed any EC and court reduced the original compensation also to 55 lakh rupees in place of 70 lakh. So court says no, the compensation 70 lakh which has been decided earlier is also wrong. That consideration should be only 55 lakh. And now this judgment suppose has been made on 1st October 2026. But we have already paid the tax in the assessment year 24-25 on the basis of 70 lakh. So now the consideration has been reduced to 55 lakh. So what will happen? We do not have a time machine. Of course, we do not have. So if we would have a time machine, we could go back in 2023. We can change this assessment year. The sale consideration should be changed from 70 to 55. And we can calculate the gain. But that is not possible because we do not have a time machine. So in this case, we have to recalculate the capital gain. We have to recalculate the capital gain in assessment year 27-28 by assuming that if the sale consideration will be 55 lakh in place of 70 lakh, then what should be the capital gain tax? So all provision will be applicable same. There is one change only. We need to change sale consideration from 70 lakh to 55 lakh. Period of holding will be same because there is transfer year is not going to be changed. That will be long-term capital asset. You can see all provisions will be same. Only the sale consideration will be changed. Now we have to calculate the capital gain taking the consideration as 55 lakh. Index, cost of acquisition, year of transfer, everything will remain the same. There will be no change, not even a single change is there. So of course, this capital gain will be lower than this capital gain. So we have paid tax in the year 24-25 and the tax on this capital gain will be lower, of course. Suppose, we just supposing it. Suppose tax was, the tax which should have been paid is as per 55 lakh, suppose is 2,40,000. So as per the new sale consideration, the tax liability will be 2,40,000, but we have paid tax 3 lakh rupees already, taking the sale consideration 70 lakh in the year 2024-25. So what will be happen? The balance 60,000 income tax is going to be refunded. So because your tax liability should be 2,40,000 due to your new compensation and you have paid tax 3 lakh rupees as per old compensation already in the year 2024-25. So balance 60,000 is going to be refunded by the income tax department to you. So you can see there can be 3 situations in section 45.5. That's why I was saying that is more important in comparison to the previous 2 special cases, because in this, examiner has multiple options to test your knowledge. So they will give you starting that this is the original compensation, calculate capital gain. Then they will give additional information. Suppose there is some extra compensation, 22 lakh. Now show the treatment of it. And then again they can ask, what if the original compensation has been reduced by the department from 70 to 55 or any other amount? Then you have to recalculate the capital gain in the year assessment year 27-28, taking all the provision as per normal case. But you have to change the sale consideration to 55 lakh. Balance extra tax, if had been paid by you, that is going to be refunded. Okay. Now the last treatment in this case, a very simple point. This will be applicable only in case of EC or OC. Generally, because the OC has been decided, you can see in 1st October 2019 it has been decided, but it has been received to you in 2023 late. Or same might be in the case of EC, that court order the EC in this year, but actual received later. We are going to taxable it in this year, but practically it might receive you after 1 year or 2 years. So there might be late payment. Due to late payment of EC or OC, department also pay you interest sometime because they are paying you late. So whatever OC 70 lakh or 22 lakh, etc. is received by you, there might be some interest payment also for delayed payment. So if any interest has been received on EC or OC, suppose 1 lakh rupees has been paid by the department, that will be given in question. So the rule says this is going to be taxable under income from other source, not capital gain. Interest is going to be taxable under income from other source. And the good part is only 50% will be taxable and 50% will be exempted. So only 50%, that means 50,000 is going to be taxable under income from other source. So this EC, OC interest has no impact on capital gain provision, but it is related to capital gain provision OCEC. That's why we discussed it over here. So this interest provision you are going to see in the income from other source provisions topic when we will cover it. Okay. So these are technically 4 parts of, you can see, the compensation provision. So those are from might be from Hindi medium if they are having problem, because that's a provision which have multiple options. So I can explain you in short in Hindi also that कभी गवर्नमेंट हमारी प्रॉपर्टी एक्वायर्ड करेगी और एक्वायर्ड करने पर अगर ओसी जो भी डिसाइड होगा, जिस ईयर में एक्विजिशन होगा वो ईयर ट्रांसफर ईयर माना जाएगा, ठीक है। और जो भी ओसी डिसाइड होगा, जैसे 70 लाख डिसाइड हुआ, वो जिस ईयर में आपको मिलेगा, चाहे पूरा मिले 70 या उसका कोई भी पार्ट मिले, वो उस साल टैक्सेबल कर दिया जाएगा, लेकिन पूरा टैक्सेबल कर दिया जाएगा, चाहे पूरा मिले या पार्ट में, टैक्सेबल पूरा 70 लाख के हिसाब से हम क्या करेंगे, कैपिटल गेन कैलकुलेट। क्लियर। ऑल प्रोविजन ट्रांसफर ईयर तक के आएंगे, इंडेक्स सुपर एटसेट्रा वो सब ट्रांसफर ईयर 19 के हिसाब से, सिर्फ ईयर आएगा इसके लिए जिस ईयर में ओसी मिला है। कई बार जब ओसी मिल जाता है तो असेसी कंप्लेन करता है कि कम है, तो असेसी कैन गो टू द कोर्ट। उसने कोर्ट से कहा मुझे और एक्स्ट्रा कंपनसेशन मिलना चाहिए, 70 लाख वाज नॉट जेन्युइन, और मान लीजिए कोर्ट ने डिसाइड करा यस मैं आपको 22 लाख रुपीस ऑर्डर करता हूं एक्स्ट्रा कंपनसेशन की, उसे हम इनहेंस कंपनसेशन कहते हैं, एनहेंस कंपनसेशन। वो जिस ईयर मिलेगा उस साल उसे टैक्सेबल करेंगे, जितना मिलेगा वो सेल कंसिडरेशन, सिर्फ उसमें से आप एक चीज डिडक्ट कर सकते हैं, दैट इज एक्सपेंसेस ऑन ट्रांसफर। कॉस्ट ऑफ एक्विजिशन एटसेट्रा सब जीरो रहेगी हमेशा, बिकॉज पूरी कॉस्ट हम पहले ही घटा चुके होते हैं जब हम ये वाला कैलकुलेट करते हैं, ठीक है। एंड जो भी गेन आएगा उसका नेचर वही माना जाएगा जो ओरिजिनल गेन का नेचर था, वो लॉन्ग टर्म था तो ये भी लॉन्ग टर्म रहेगा। जो इसमें एक तीसरी स्पेशल केस बनता है वो ये कि कई बार कोर्ट, जब आप कोर्ट पे जाते हैं कि मेरा कंपनसेशन बढ़ा दीजिए, तो हो सकता है कभी ऐसा भी हो कि कोर्ट कंपनसेशन बढ़ाने को भी कैंसिल कर दे और जो आपको ओरिजिनल मिला है 70 उसको भी रिड्यूस करके 55 लाख कर दे कि 70 नहीं, आपको सिर्फ 55 लाख मिलना चाहिए था। अगर ऐसा हुआ तो हमने जो 70 लाख से कैलकुलेशन करी है वो हमारी गलत हो चुकी, लेकिन हम उसे चेंज नहीं कर सकते बिकॉज ये बात पता चली 2026 में और वो कैलकुलेशन हम कर चुके हैं 2023 में। तो ऐसे केस में हमें वो कैपिटल गेन रिकैलकुलेट करना पड़ता है जिस साल कोर्ट का ये डिसीजन आएगा। सब कुछ उसमें सेम रहेगा, पीरियड ऑफ होल्डिंग, इंडेक्सेशन, कॉस्ट, सब सिर्फ हम चेंज करेंगे सेल्स कंसिडरेशन। वो 70 की जगह 55 लाख से कैलकुलेट होगा। जो टैक्स बनेगा, अगर हम पहले ज्यादा दे चुके हैं तो जो बैलेंस टैक्स हमने ज्यादा दे दिया है वो गवर्नमेंट हमें रिफंड कर दे। जो भी ओरिजिनल या एनहेंस कंपेंसेशन होता है, क्योंकि वो आपको लेट मिलता है डिसाइड होने के बाद, तो जो भी मिलता है उस पर इंटरेस्ट भी गवर्नमेंट आपको देती। जो भी इंटरेस्ट अगर मिली है क्वेश्चन में लिखा है तो वो इनकम फ्रॉम अदर सोर्स में टैक्सेबल होगी, 50% एग्जेम्प्ट रहती है और 50% टैक्सेबल रहती है। आई होप दोज आर फ्रॉम हिंदी मीडियम दैट माइट बी अंडरस्टैंड द प्रोविजन नाउ easily. Okay, so here all the provision has been written over here. It says if any capital asset is compulsory acquired, taxability of asset in case of asset compulsory acquired by government. You can see in case of original compensation, it says whole compensation will be taxable in the year in which whole or part of the compensation received. So that's why we need to taxable the full 70 lakh even if we receive 50 lakh in that year. Numerical treatment: original compensation, transfer year will be the year in which property compulsory acquired, but capital gain will be charged in the year compensation full or part received. Period of holding will be same. Sale consideration will be the full value of OC less cost of acquisition, etc. Same. EC provision: many time person whose capital asset have been taken over by the central government and who get compensation from the government went to the court of law for EC. If the court awards compensation which is higher than the OC, the difference thereof will be chargeable to capital gain. Cost of acquisition in case of EC, etc. will always remain nil. Compensation EC is going to be taxable as per this provision in order to remove the uncertainty regarding the year in which the amount of compensation received in pursuance of an interim order of the court, tribunal, etc. is chargeable under the head capital gain in the previous year in which the final order of such court, tribunal or other authority is made. So that is going to be taxable in the year in which final order of the court has been received. Format will be very simple. Sale consideration will be your EC, cost always nil. Now the third case is reduction of EC, where capital gain has been charged on the compensation received by the assessee for the compulsory acquisition of any capital asset or EC received by the assessee, and subsequently such compensation is reduced by the court, tribunal authority. The assessed capital gain of that year shall be recomputed, that means recalculated, by taking the new consideration which has been reduced by that court, etc. This recomputation shall be done by way of rectification. Next is the interest provision. Taxation of interest and EC, 50% will be exempted. 50% is going to be taxable under income from other source. Death of the transferor: it is possible that the transferor may die before he receive the EC. In this case, the EC will be chargeable to tax in the hands of the person who received the same, the legal heir, etc. The same treatment will be done in their head. So that is section 45.5. So there were three cases in which capital gain year will be deferred. The new provision has been inserted from this year. This is yet to be calculated because this has been applicable for some cases on or after 1st April 2023. That is computation of capital gain in case of market linked debenture under section 50AA. You might remember that when we discussed the definition of long-term capital asset or short-term capital asset, so there was this definition that these security will always be treated as short-term capital asset, irrespective of the period of holding. After this section 50AA, I will take the queries. Transfer of unit of a specified mutual fund or market linked debenture. Very simple provision, very, very simple. Section 50AA provide for the computation of capital gain in case of specified mutual funds or market linked debenture. Section 50AA will have an overriding effect on the definition of short-term capital asset, long-term capital asset, because it will always be treated as short-term. So that is having an overriding effect, which defines a short-term capital asset. Accordingly, capital gain arising from transfer or redemption of maturity of a specified mutual fund or market-linked debenture will always be short-term capital gain. So from point one, just explain one thing, that these will always be treated as short-term capital asset. Clear? Now, computation of capital gain. How we will calculate? Whatever we will receive on redemption will be the sale consideration. And whatever we have paid at time of purchase will be our cost. Indexation cannot be done because that is a short-term capital asset. The full value of consideration received or accruing as a result of the transfer or redemption or maturity of unit of a specified mutual fund as reduced by the cost of acquisition of the debenture or unit and the expenditure incurred wholly exclusively in connection with such transfer, redemption, maturity would be deemed to be the capital gain. So whatever you will receive on the as a consideration or redemption value, that will be sale consideration. You have to reduce the purchase price and any expense on transfer. Balance will be your capital gain. No deduction in respect of STT. Any security transaction tax, if has been paid, there will be no deduction in this capital gain. Next is capital gain on distribution of asset by companies in liquidation, section 46. Transfer of shares in case of liquidation of company. The problem is this, in case of liquidation of company, the treatment in the hands of shareholder, we need to study, because the liquidation of company transfer is generally not regarded as transfer under section 45. So we need to understand the provision in the hands of shareholder. What will happen if a shareholder receive asset, etc. at the time of liquidation of a company? In that case, there is a concept of deemed dividend also. First, we need to understand the concept of deemed dividend. But the deemed dividend concept will be discussed in income from other source. The provision says like this. Okay, first, I should take some query, then we will move on to liquidation of company provision. Null Girish Harsh is asking, is capital gain on a specified agreement removed? Yes, it was in the last year, assessment year 23-24 study material, section 45-5A. That provision has been removed from the study material. That's why we are not discussing it for pre-assessment year 24-25. Okay. Miss Melba Motilal, good morning, sir. Good morning, Melba. Next is Mr. Ninad Desai is asking, sir, suppose we bought one lot of shares 5 years ago and we bought another lot of share of same company 6 months ago. Then whether they are long-term or short-term gain, if we sell them and we get indexation, it's very simple. Mr. Ninad Desai, we need to see which lot you have sold. If you sold the lot you have purchased 5 years ago, there will be long-term capital asset, and according to that, we need to calculate it. And if we sold the lot which relate to 6 months before, so that will be short-term capital asset. How you will identify? We always apply the FIFO method. So whenever you will sell those shares, we will assume that you have sold if the information is not given in the question. Then we will suppose it is on the basis of FIFO method. Otherwise, there will be specifically, we will know that what kind of share we are selling. So if you are selling the 5-year back, that will be long-term indexation apply. If that is 6 months old shares, then no indexation, that will be short-term. Okay. Swati Krishna asking, sir, claim received in respect of loss of stock and profit covered under the capital gain. What claim received in respect of loss of stock? I am not getting this. Stocks, we are talking shares, or stock, we are talking stock in trade. So if you're talking about stock in trade, that is going to be treated in PGBP head, not capital gain. Anything which is related to my stock in trade of business, that is not going to have any treatment under capital gain. Okay. Vaishali Bindal asking, sir, if not insured, then I have discussed this thing in the definition of transfer, Vaishali, in case of relinquishment. If there is destruction of asset and asset is not insured, then there is no treatment under capital gain, not applicable. We will only calculate capital gain in case of asset destroyed if they are insured. So their loss will be dead loss. If asset is not insured, definitely you are going to have a loss, but that is a dead loss, no treatment under capital gain. Rehan is asking, do we have to mention the provision number in the answer? If you are confident that you actually remember the correct section or provision, then you should answer it. You are talking about the provision, I guess, not the section. No, you're talking about the section, that is provision number. So if you are sure that you have remember the correct section, then you can refer it in the solution. But you have any doubt, then please do not write the wrong section. Please do not write the wrong section. Okay. Next is Mohammed Sohail. Sir, please upload all topic example. What does that mean? Mohammed Sohail, I did not get this. Next is Devraj, good morning. Ramja, good morning. Okay. Suman Goyal is asking a good question. Mrs. Suman Goyal asking, sir, in case part compensation received by SSC is less than tax payable, in such case, what is provision? Provision will remain the same. 70 lakh was the original compensation. Okay. And suppose the tax is like on that is 5 lakh. And you only receive 2 lakh rupees compensation. So we have to taxable the full value of 70 lakh as compensation. So it might be possible that your compensation will be less than the tax value because you have to calculate tax taking the full compensation. But practical compensation might be you receive less than the amount of tax is imposing on that compensation. So that's a practical problem that might happen. If that is happening, you can go to the assessing officer or income tax officer, and that can be dependent upon case to case basis. There is no specific rule regarding it. But let me tell you practically, if government decided compensation and if they are going to pay it, so generally they pay it in full value, or if they are paying in installment, then you can send an application to the department, you can discuss to the assessing officer. In that situation, government will make a specific provision for you also. That can be possible, but for the time being, we do not have any such provision that if the tax liability is lower, then what will be done? For the purpose of examination, you have to take the full value. Next is Shivanan, okay. Sir, is there any minimum sum to be received or even it start from rupees 1? If any sum received out of the original compensation, we have to take the full value as the sale consideration. There is no minimum value has been mentioned. Mr. Prince is asking any relief concept. No, there is no relief concept. We have exemption, etc., but there is no relief like salary, etc. Aisha Safa Said is asking, sir, in case originally it was a loss, will EC also be a loss? No, EC will be the gain. We are saying that the original, if it is long-term asset, then we will take the long-term nature for the EC. Or if original is short-term, then we take the original nature of the EC is short-term. If the original gains result in a loss, then EC will not called a loss. EC will remain the gain. You can set off your loss of last year from that EC amount, but that is a set off chapter that is going to be discussed later. For the purpose of capital gain, that EC will remain the profit. It will not convert it into the loss, even if the original is the loss. So for the purpose of EC, we are only taking the nature of gain or loss, long term or short term. I am not saying if that is loss, long term capital loss in case of OC, then the EC will again will be called loss. No, it will be long term capital gain. Okay. Next is Navneet is asking, sir, if any loss on compulsory acquisition, what will be treatment, sir, for the STCG? There will be set of concept that your loss can be set off from the other income, etc. That will be discussed in set off chapter. Next is Ruturaj is asking, these situations are like a student wanting to recheck answer sheet and the examiner deduct marks even more. No comments. Next is Swati Krishna. Sir, if Mr. A has started his property, transferred his property to Mr. B for 50 lakh on 1st October 23, but received only 35 lakh in the previous year 23-24 and balance and so on, we will take the full consideration 50 lakh rupees. If you received 35 lakh, does not matter. We have to calculate by taking full value as consideration. Okay. Because for the purpose of capital gain, again, like salary is received or due, whichever is higher, need to be taken as the consideration. Mr. Prince, will income tax department also pay interest on the refund amount of rupees 60,000? No, income tax will pay interest on this refund if they delayed in payment. But because the department, it was not the mistake of income tax department. It was the mistake of that department which have paid you the extra compensation. So on this 60,000, income tax will not pay any interest. Yes, Shivam, the expense includes court expenses, etc. That can be deducted from EC. Good question. Mr. Prince, can we say that COI and COA are for STCG and ICOI and ICOA are for LTCG? Yes, you can say that, of course. Mr. Shivanan is saying, is it applicable for agricultural land also, sir? That's a good question. If it is an agricultural land in rural area, then of course it's not applicable because that is not a capital asset. But if it is an agricultural land and it has been compulsory acquired, then we have a special section under section 1037, that is an exemption that will be discussed in part 2 of capital gain. So if any agricultural land has been compulsory acquired by the government, so there will be no capital gain. If there are certain conditions of section 1037, what we are going to discuss in part 2 of capital gain has been fulfilled. So if these conditions fulfilled, capital gain exempted, not fulfilled, taxable. Next is Rohan Kumar, STT paid on shares allowed as deduction? No, if it is your capital asset, then you cannot claim the STT on shares also. Harish Chandra asking about the tax rate. The rate of taxes on long term, etc., that is going to be discussed in part 2 of capital gain. Okay, so we are not discussing the rate of tax till now. Sayanda, sir, how there will be capital gain in case of destruction of asset? There are more chances of only loss, because if your asset value which has been destructed is the compensation will be not more than that. The compensation will always be lower than that. So there will be chances of always loss, but that loss can be set off from your other income if your asset is insured. Next is Gopi Under section 45(5), we have received EC as per court order. We will calculate that amount long-term cap gain directly. No need to calculate index. Yes, there will be no indexation. You have to show the format that sale consideration is your EC, expense on transfer, if any, you need to deduct, but cost of acquisition, index cost of acquisition, you have to write it down nil. Then the solution will be the same. Okay. Suman Goyal saying thank you. Thank you. Next is Mohammad Sohail, example given by you in class for all topic, please upload on website. No, that is not possible. You have to watch it on the video. You can write it down by pausing the video and solve it. So these are not example which need to be uploaded on the BOS, because all these kind of question has been in study material, or we will discuss these kind of question on test your knowledge. You can see the video if you want those example. You can take the screenshot. So we have to write section in the examination. Are it compulsory? No, sections are not compulsory. But if you learn some section, if you are sure that you are remembering the correct section, if you're going to write it, that is of course beneficial for your marks. Next is Hemlata. Sir, compulsory acquisition by law is a kind of extinguishment. Yes, exactly. You can say it's a kind of an extinguishment, but extinguishment refers to those cases in which asset has been acquired by someone other than law. Like bank is confiscating your asset for not paying your EMI, etc. But if the government is acquiring it, so we have the specific point, that is compulsory acquisition under any law. So that is nature can be same, but for the purpose of definition of transfer and the treatment, they are different. Nagarju asking, sir, in the compulsory acquisition of land, if the assessee receive compensation as a part of land and part cash, what will we do? Total consideration will be your sale consideration. How does it matter it received in cash or non-cash? But generally, government do not pay consideration in cash. They always transfer that into your bank account. Wow, Devinder Singh is asking, profit on sale of stock under which head will be taxable? If you are talking about stock in trade, that will be PGBP income, of course. Bhakti Patkar, Miss Bhakti Patkar is saying, sir, earlier I was not able to send query, but now the BOS mobile app added more features. So now I can send my query easily on mobile BOS app. So you should thank to BOS, of course. Profit on sale of stock. Okay, shares under which head will be taxable? I have told earlier also, if shares are your stock in trade, if you are dealing frequently in shares, selling and purchasing frequently in shares, in that case, your share will be your stock in trade. And in that scenario, that will go under PGBP, whether speculative business or not, depends. But if share is your investment, you are not frequently dealing. As I myself, I do not frequently deal in shares. I purchase one share, I hold it for 3, 4, 5 months or a year, and then I sell it off. That will be your investment. That will be fall under capital gain provision. Okay. So I have taken all the queries till now. Moving on to the provision. That is liquidation of company we were supposed to solve. Okay. In case of liquidation of company, LOC, liquidation of company. So there is no treatment in the hand of a company capital. So in the hands of shareholder, there are treatment under income from other source and capital gain also. The provision says in certain cases, there is certain provision in case if shareholder receive any asset at the time of liquidation. So that assets received by shareholder at the time of liquidation will be deemed dividend. Right, in section 222C. So that will be covered under income from other source in detail, that what is deemed dividend. So that will be the treatment in income from other source. Clear? Why I am telling you deemed dividend? Because it is related with the capital gain scenario. Now the provision says at a time of liquidation, whatever money plus FMV of asset received by assessee. Suppose 10 lakh rupees money and FMV of asset received by assessee. Then whatever is the deemed dividend under section 222C become under income from other source, that need to be deducted from this value 222C. So whatever be the deemed dividend value, suppose in this case deemed dividend value is 6 lakh rupees. Do not ask what is deemed dividend, that will be discussed in income from other source. So whatever money or FMV of asset is received by the shareholder at the time of liquidation need to be taken. Suppose 10 lakh. Suppose deemed dividend is 6 lakh. So now this 4 lakh will be the sale consideration in the hands of shareholder in case of liquidation of company. Now the cost of acquisition, etc., can be deducted as per normal provision. So this was the important figure, that what will be the sale consideration in case of liquidation of company. So whatever received by the shareholder of money and FMV of asset, you have to deduct the deemed dividend under section 222C. The remaining will be your sale consideration for the purpose of capital or for the purpose of calculation of capital gain. So you can see in the case of a liquidated company, that shall not be regarded as transfer. You can read it, of course. The main provision is for treatment in the hands of shareholder. Shareholder receiving money or other asset from the company on its liquidation. You can see with the help of diagram, the first part is all about income from other source. Distribution attributable to accumulated profit. What is accumulated profit? What is distribution? That is going to be discussed in income from other source. You can see it, income from other source. We will discuss this. So this will be deemed dividend, and this is going to be discussed in income from other source. This is the second part we are talking about, money received plus FMV of asset distributed minus deemed dividend under section 222C. That will be your consideration for the purpose of calculating capital gain. Other provision will remain the same. Clear? Next is buyback of share. I believe you all know what is the meaning of buyback of shares. So if any company going to buy their share from its shareholder, generally companies sell their share to the shareholder. But in some circumstances, if company decided to buy back its shares from the shareholder, then what will happen? Company will pay the money and buy the shares. So in that case, there will be capital gain in the hands of shareholder. Whatever amount they are receiving from the company for the buyback of share will be the sale consideration, and normal provision will be applicable. Very simple provision. With the help of a diagram, we can understand the full concept. This is a very beautiful diagram framed by in the study material of you. So you can see there is two concepts, taxability in the hands of the company or taxability in the hands of the shareholder. So read carefully. If it is buyback of share by domestic company, if it is a buyback of share by a domestic company, if the share has been buyback by a domestic company, then the treatment will be in the hands of company. You can see the company needs to pay additional tax, that is 23.296% additional tax. And there is no treatment in the hands of shareholders. So if it is a buyback of share by a domestic company, then there is exemption in the hands of shareholder. Why? Because company going to pay tax on that. Okay. If it's buyback of share by a company other than domestic company, so if this buyback of share, but other than domestic company, then no treatment in the hands of the company. Now shareholder need to pay the tax. So whatever amount the shareholder is receiving will be his sale consideration, and whatever cost has been paid, that is going to be deducted as per the normal case, cost or index cost as the case may be. So income arising to shareholder taxable as capital gain under section 46A if it is shares and it has been distributed by buyback by other than domestic company. If it is any security other than share, which says buyback of specified security. So you can see in column number this and this, we were talking about shares. If buyback by domestic company, then shareholder and exemption. Company need to pay tax. If it is other than domestic company, company exempted, shareholder need to pay tax. If it is any specified security, that means other than shares, by any company, either by domestic or other than domestic, then the same treatment as per this case. That means no treatment in the hands of company, but shareholder need to pay the tax as per the section 46A. Now again, a very important provision, that is capital gain on transfer of depreciable asset. Very important and very surprisingly very easy also. In case of depreciable asset, we need to calculate the capital gain as per section 50. Let me give you an example for that. Let's make a simple chart, that is capital gain in case of depreciable asset. Now let me remind you, there's a concept of block of asset, what we have discussed in PGBP topic, block of asset. So for the purpose of capital gain calculation in this capital gain topic, we should remember the concept of block of asset. Block of asset we have discussed in detail. For the time being, I can recall you the provision. It says block of asset means same rate of depreciation asset. So this will be treated as a single asset. Once an asset comes into the block, its individual identity ceases to exist. So that was a definition of block of asset. So in case of depreciable asset, if any asset has been sold, so it says there will be two circumstances. Suppose there is an opening block of asset in case of depreciable asset, and there are, suppose, 5 assets in the opening block. On 1st April 2023, there are 5 assets in opening block. One new asset purchased during the year, A, B, C, D, E. So new asset has been purchased in the previous year, F. So we have 5 assets in the opening block and one new asset has been purchased in the block. So total we have 6 assets in the block. So now there will be two circumstances. It says whole block of asset sold. So either this will be the case that question says assessee sold all the assets in the block. That means all 6 assets has been sold in the previous year. So if whole block of assets sold, how we need to calculate the capital gain? It says take the sale consideration that will be given in question, deduct opening WDV of block of asset that will be given in question, and deduct actual cost of asset purchase in previous year. Technically, in opening block of asset, we are going to deduct the value of A, B, C, D in E, and this is going to deduct the value of asset purchase, that means F in our above example. So now that will be either short-term capital gain or short-term capital loss. Always remember, for depreciable asset, there are always short-term gain or loss. There is no concept of long-term gain or loss in case of depreciable asset. So there is no concept of indexation also. So always depreciable asset gain will be short-term, whether it's a gain or it will be a loss. So first case might be when whole block of assets sold. The second case, when one or more asset has been transferred or sold. That means whole block of asset not sold. So you can see in the example, there were 6 assets. So even if I am going to transfer 5 out of them, whether it's new asset or old, 5, even one asset remain in the block. So this case will be applicable. So first case will be applicable only when all block of asset has been sold, whole block of asset sold. And the case B will be applicable when even if there one asset left, then case B will be applicable. How we need to calculate the capital gain in this case? We need to take the sale consideration for those assets, those has been transferred, whether it's 2, 3, or 4, or 5. Suppose in our example only 2 assets has been transferred, sold. So we will take the sale consideration of 2, that will be given in question. But the good or bad part is the same. Deduction will be for full block asset. We need to deduct the opening WDV of block of asset. Full, not only 2 asset block value should be deducted, but the whole block value should be deducted. Whole, always. Because that is the definition of block of asset. Once asset comes into the block, so its individual identity ceases. So even we are transferring only 2 assets, but the WDV of full block need to be deducted. Complete value. Exactly, that means same value need to be deducted. Even if new asset has been transferred in these 2 assets or not, does not matter. Suppose we transferred asset A and asset D. These 2 assets are asset A and asset D out of the opening blocks. So sale consideration will be for A and D. But the value of block of asset will be A, B, C, D, and E. Full need to be deducted. And even F value need to be deducted. Same provision for deduction, whether in this case or this case. Actual cost of asset purchase in previous year. So even F value need to be deducted also. Now this will be your answer, but there is a thing to understand. If this is short-term capital gain, so that will be your answer. But if it result in short-term capital loss, then not applicable. So if whole block of asset has been transferred, then it does not matter whether it's a gain or loss. That is going to be declared as a gain or loss under capital gain. But if whole block of asset has not been transferred, then if it is short-term capital gain, so that is going to be short-term capital gain in your capital gain topic. But if it is short-term capital loss, then it is not going to be declared as short-term capital loss under capital gain. You can, if you calculate and it result in short-term capital loss, then you can write it down, not applicable to show as a capital loss under capital gain topic. So always remember, if this scenario happens, then you have to write it down. That is not a loss practically. We have to write it down. It's a not applicable case. You need not to calculate it. Okay. Because there is a reason behind it that I have discussed in depreciation concept of PGBP. Because in this case, why we are calculating it as a gain or loss? Because in this situation, you cannot claim depreciation in PGBP. So that's why, because you cannot claim the depreciation in this cases, because whole block of asset has been ceased to exist. So there is no block of asset, so we cannot claim the depreciation in PGBP. So the treatment will be either gain or loss. That will be in capital gain chapter. If there is capital gain arise, then again, there is no depreciation in PGBP you can claim. You can solve it for the purpose of PGBP and you will find that there cannot be depreciation because there is no value exist. You have gain. That means your block of asset value is less than the sale consideration. So there will be no value. So you cannot claim the debt. So there will be treatment in capital gain head. But in this case, if there is loss, then that means there is depreciation in PGBP head. You are going to claim the depreciation in PGBP on this value. So that's why you are not supposed to claim loss in capital gain and DAP in PGBP. There can be only one treatment in one head. So because in this scenario, you cannot claim the PGBP, you cannot claim the depreciation in PGBP. So treatment will be only capital gain head. In the same this scenario, you cannot claim the depreciation in PGBP head. So treatment will be remain on only capital gain. But in this scenario, you are going to claim the depreciation in PGBP. So that's why, because you are claiming DEP in PGBP, so this loss cannot be claimed under capital gain, because that will be the double benefit to the assessee, and that is not allowed. You will see this case, then we will solve the illustration after this provision. So these are the concept. You can read it, of course. This is the case A and case B. When whole block of asset had been sold, the diagram I have been made, that is technically case A. Whatever has been written in case number B, that is case A as per the diagram. And whatever is case A, that is technically the case B, when one or more asset has been transferred. So you can see when whole block of asset has not been sold, then only capital gain will be treated. But if full block of asset has been sold, then whether it is a capital gain or whether it's a capital loss, that is going to be declared in capital gain head. So we have a very good example to make you understand that why there was depreciation, then the treatment will not be in capital gain. That is example Singhania and Company. We are going to read this example, then we are going to solve it. Please read this example. Till that time, I have to drink water. So depreciation के लिए, I can explain in Hindi in short also. डेप्रिशिएबल एसेट के लिए दो सिचुएशन अराइज होंगी. फर्स्ट सिचुएशन, या तो सारा ब्लॉक ऑफ एसेट आप सेल कर देंगे या सारा ब्लॉक ऑफ एसेट आप सेल नहीं करेंगे. सारा ब्लॉक आप बेचेंगे तो जो भी पैसा मिला वो सेल कंसिडरेशन, उसमें से हम ओपनिंग WDV पूरे ब्लॉक की घटाएंगे. और अगर कोई नई एसेट परचेज हुई है, वेदर मोर देन 180 डेज और लेस देन, कोई फर्क नहीं पड़ता, पूरी लेस करेंगे. अगर सारा ब्लॉक नहीं सेल हुआ है तो सेल कंसिडरेशन उन्हीं एसेट की आएगी जो ट्रांसफर हुई है, लेकिन फिर भी पूरे ब्लॉक की वैल्यू आप घटाएंगे और कोई नए एसेट खरीदी गई है वो भी माइनस होगी. अगर सारा ब्लॉक बेचा है तो चाहे गेन आए या लॉस, वी हैव टू शो इट. अगर सारा ब्लॉक नहीं बेचा है तो सिर्फ गेन को शो किया जाएगा. अगर लॉस आता है तो उसे नॉट एप्लीकेबल करके हटा दीजिए, बिकॉज उस केस का ट्रीटमेंट ऑटोमेटिकली PGBP हेड में होता है, बाकी का सिर्फ कैपिटल गेन में रहता है. वो कैसे, इस एग्जांपल में आप समझेंगे. एग्जांपल पढ़ लीजिए अच्छी तरह. चलिए मैं ही पढ़ देता हूं. Singhania and Company, a sole proprietorship, owns 6 machines put in use for business in March 2022. Okay. The depreciation rate is 15. The WDV of these machines, opening WDV of block has been given 8,50,000. 3 of the old machine were sold on 10th June 2023 for 11 lakh. A second-hand plant and machinery has been bought on 8,50,000 on November 13th. So you can see, even after selling of the old machine, the new has been purchased in November. You have to calculate the depreciation, compute the capital gain. Then third point will say, suppose what if the consideration is 21 lakh? That we will solve later. First of all, we will solve point number 1 and point number 2. So you can see, so opening WDV has been given is 8,50,000. First of all, they are asking for depreciation. So first of all, we are calculating depreciation. You will see, in any case, if depreciation able to calculate, then automatically there will be no capital gain. We cannot solve that capital gain scenario. So opening WDV has been given 8,50,000. New machinery has been purchased in November. That is less than 180 days. That is also worth rupees 8,50,000. The machine has been sold for rupees 11 lakh rupees. So the remaining WDV for the purpose of calculation of depreciation will be 6 lakh. Now I told you the FIFO method, but again in this question, the machine has been sold in June, new has been purchased in November. So automatically this 11 lakh consideration as per FIFO method, we need to deduct. We have discussed this provision in depreciation. So out of this 11 lakh, 8,50,000 will deduct from this opening value. Opening value comes to nil, 0. Then remaining 2,50,000 out of this 11 lakh will be deducted from new value. So this will remain 6 lakh. So we can see this 6 lakh relates to which asset which has been purchased for less than 180 days, which has been used for less than 180 days. So depreciation rate will be 7.5%, half of the rate applicable, which will be 45,000 your depreciation. So you can see in this scenario, we are able to calculate the depreciation. Why? Because for the purpose of depreciation, there should be two conditions must be fulfilled. There must be value in the block, which we have 6 lakh, and there must be some asset in the block. So opening block has been finished, but we have the new asset exists. So that's why we are able to calculate the depreciation in this case. Now in this scenario, we need to calculate capital gain. For the purpose of capital gain, which case this falls? Whole block of assets sold or whole block of asset not sold? The case is whole block of asset not sold. So in this case, we only calculate the short-term capital loss if, we only need to calculate the short-term capital gain. So if it is short-term capital loss, we need to ignore it. Whole block of asset not sold. So in this case, sale consideration will be 11 lakh less opening WDV 8,50,000. New asset purchased 8,50,000. So there will be short-term capital loss 6 lakh. So we cannot calculate it. Why? Because on this 6 lakh, we are already claiming depreciation and we are reducing our profit by claiming depreciation in our PGBP. So we are reducing our net profit. So if we are allowed to take the short-term capital loss 6 lakh rupees and need to allow our capital gain also reduced by 6 lakh. So that will be a double advantage. We are going to claim the depreciation on this 6 lakh in multiple years, but technically we are going to reduce full 6 lakh rupees from our net profit in multiple years. So we are getting the benefit of reducing our business profit via 6 lakh rupees in multiple years. But if we allowed to take the short-term capital loss benefit also, so that will be the double benefit. That's why it is going to be removed. So that was the first case. Now, the third point was saying, suppose this machine has been sold for 21 lakh rupees in place of 11 lakh. Now what will happen? First of all, need to try the depreciation. If you are able to calculate the depreciation, then there will be never capital gain in case of depreciable asset. And if you are not able to calculate the depreciation in PGBP, then there will be treatment only in capital gain chapter automatically. Now see, what if the sale consideration is 21 lakh? Opening WDV 8,50,000. Asset purchase for 8,50,000. Total is 17 lakh. Now the sale consideration, it says, suppose it's 21 lakh in place of 11. So we can reduce only maximum 17 lakh. Even we have 21, but we cannot reduce the sale consideration exceeding the WDV for the purpose of depreciation. So there will be no value left. That is 0. And because no value, so we cannot claim the depreciation. Now you can see, because we are not able to calculate the depreciation, so automatically capital gain is going to be applicable. Now sale consideration will be 21 lakh. Whole block of asset not sold, is still the same condition. Opening WDV 850. New purchase 850. So now we are having gain, and gain is allowed. There is short-term capital gain. And as per the diagram, we have seen that the gain is allowed if the whole block of asset has not been sold. Then if there is short-term cap gain, we need to calculate. But if it's short-term capital loss, we cannot claim, because we can claim the depreciation in PGBP in this scenario. I hope it's clear. That was the illustration. You can see the solution, of course. You can read the provision. Now the next point is slump sale. Let me take some query, then we will see. Okay. Nagarju is asking, sir, my doubt are not about cash, sir. Okay. What if received compensation along part of land and also amount? Okay. So if you received anything in consideration which is non-monetary, then we have to take the fair market value of that land part plus the monetary value. That total will be my original compensation. Okay, Mr. Nagarju, I hope it's clear now. Next is Mrs. Suman Goyal is saying TCS did buy back in this month. Okay, very good. Mr. Devinder Singh, sir, which income are taxable under the head capital gain? Please show in table so that it may be easy to us understand at present. I am in confusion. You are talking about the buyback of shares, or you are talking about the liquidations of company? So kindly let me know, Mr. Devinder. Is it the buyback query or it's a liquidation query? Next is Anmol Patwa is asking, sir, as per the prescribed section, when EC received, then for computation of capital gain, we reduce expense on transfer. But if expense on transfer already reduced in the original compensation, then we have to reduce an expense or not? No, no, no. We were talking about if any expense on transfer for receiving that EC has been there, then it need to be reduced. I'm not talking about the expense on transfer related to original compensation. If that expense on transfer has been deducted from original compensation, it cannot be reduced again from EC. We were talking about the expense on transfer which relate to EC only, like code fees, etc. So if any expense on transfer has been deducted earlier, we cannot deduct it again. That is the universal rule. No expenses can be claimed twice, no income can be taxable twice. So we were talking about the expense on transfer, which is related to only the EC, not the OC. Okay. Rahul Jain, sir, what about the remaining value assets? In which case you were talking about, Rahul, when whole block of asset has been sold, or whole block of asset being, if there is no value remaining, if the sale consideration is higher than your WDV and the asset purchase value, then there will be no treatment of that value. That is going to be your capital gain, etc. There will be no depreciation automatically. Shivanan is asking, sir, what if balance assets sold in next year? So if balance assets sold in next year, there will be capital gain only, because the full value has been deducted. So whatever you will receive, that will be going to be having a capital gain only. Next is Mohammed asking, sir, how we find out to compute depreciation on PGBP or capital gain? I'm not getting your question. The depreciation calculation has been discussed in PGBP topic, but your question is not clear, Mohammed. Kindly ask me in detail exactly what you are asking. Swati Krishnan, sir, for remaining asset in the block, depreciation is applicable in case of STCL. Yes, whatever value you have left, that is going to be claimed as depreciation in case of STL when full block of asset has not been sold. If you have any query in regarding of depreciation, in case of depreciation provision, kindly ask your query with this, that when block of asset has been sold full or full block of asset has not been sold. So I will be able to answer you, because that is a confusion, that what you are asking about the values or depreciation, that will either fall in the case A or case B. So kindly write me with your depreciation query, writing with this, when full BOE, matlab block of asset has been sold or block of asset not sold, then I will be able to give you the correct answer. So instead of showing STCL, is it possible? No, it is not possible. We have to follow the rule. We have to follow the law. We cannot change the law. Whatever has been prescribed in case of this, we have to follow it. Next is, sir, can you please explain for third solution in example with in Hindi possible, Mr. Parth Rana? बिल्कुल पॉसिबल है मिस्टर पार्थ, क्यों नहीं बताएंगे? देखिए, जो एग्जाम्पल था उसमें पार्थ पूछ रहे हैं कि जो थर्ड पॉइंट है, ये वाला थर्ड, ये वाला, ठीक है, कि सपोज इस क्वेश्चन में अगर हमने मशीन 11 लाख के बजाय 21 लाख में बेच दी तो क्या होता? तो देखिए, ये होता, अगर हमने मशीन्स को 11 लाख की जगह 21 लाख में बेचा होता, 21 लाख में, तो हम पहले डेप्रिसिएशन निकालते, सेम ओपनिंग डब्ल्यूडी, सेम लाइक दिस, देयर इज नो डिफरेंस. एसेट परचेज 17 लाख टोटल वैल्यू, नाउ द सेल कंसिडरेशन इज 21 लाख, 21 लाख हमारा कंसिडरेशन है. बट रूल कहता है पीजीबीपी का कि हम सेल कंसिडरेशन या मनी रिसीव्ड में से सिर्फ उतनी ही वैल्यू डिडक्ट कर सकते हैं जितने तक हमारी डब्ल्यूडीवी गिवन है. So 17 lakh is WDV, so we can deduce only 70 lakh. So there will be nil value. और अगर हमारे पास वैल्यू निल है तो हम डेप्रिसिएशन कैलकुलेट नहीं कर सकते. अब इस केस में गेन निकलेगा, तो अब हम कैपिटल गेन जब सॉल्व करेंगे तो सेल कंसिडरेशन होगा 21 लाख, ओपनिंग डब्ल्यूडीवी प्लस एसेट परचेज, उसे हम डिडक्ट करेंगे, बैलेंस 4 लाख हमारा बन जाएगा शॉर्ट टर्म कैपिटल गेन इन दिस केस. ऑटोमेटिकली जब डेप्रिसिएशन नहीं क्लेम होगा पीजीबीपी में, तभी ट्रीटमेंट आप कहां कर पाएंगे? कैपिटल गेन में. किसी भी केस में डेप्रिशिएबल एसेट में अगर पीजीबीपी में डेप क्लेम हो गया ब्लॉक पर, तो उस केस में कभी भी ट्रीटमेंट कैपिटल गेन हेड में नहीं होगा, नहीं होगा, नहीं होगा. ये बात ध्यान रखिएगा, ठीक है? ओके. इंस्टेड ऑफ, ओके डन. नैन्सी सक्सेना, सर आप जब पढ़ाते हैं एवरीथिंग बिकम इजी, बट व्हेन टेक बुक देन बुकिश एक्सप्लेनेशन इज क्वाइट डिफिकल्ट. प्रॉब्लम क्या है इसमें? न्यूमेरिकल टॉपिक है, अगर आपको समझ आ रहा है ट्रीटमेंट, बुक से ज्यादा फोकस करिए इलस्ट्रेशन क्वेश्चंस पर. इफ यू आर एबल टू सॉल्व द इलस्ट्रेशन एंड क्वेश्चन, देखिए बुक की लैंग्वेज है लॉ की लैंग्वेज, दैट्स व्हाई वी आर हियर, व्हाई द फैकल्टीज आर हियर. फैकल्टीज देयर टू एक्सप्लेन यू द प्रोविजन इन द सिंपलेस्ट वे, सो यू कैन अंडरस्टैंड द प्रोविजन. अभी मोबाइल चलाना है तो कोई मैनुअल थोड़ा ना पढ़ते हैं, आप मोबाइल लेकर आते हो ना, उसमें एक बुक निकलती है हाउ टू यूज मोबाइल, उसे कभी पढ़िए. क्या उसके हिसाब से आप फोन चलाएंगे? मोबाइल कैसे चलाते हैं हम समझ जाते हैं, इससे ये करना है, इससे ये, एंड उसके हिसाब से हम फोन चलाते हैं. The same way, examination needs your solution. We have to write down the format and we have to solve it. They do not ask you कि आप उस तरह की लैंग्वेज के हिसाब से लिखें. तो आपके लिए वो जो लैंग्वेज दी है वो लॉ की लैंग्वेज है, एंड हैज टू बी लाइक दिस, उसको सिंप्लीफाइड नहीं कर सकते. सो एग्जाम्पल, इलस्ट्रेशन, फैकल्टीज क्यों अवेलेबल कराए जा रहे हैं BOS के द्वारा आपको, इंस्टीट्यूट के द्वारा आपको? बिकॉज आप उन प्रोविजंस को अच्छी तरह समझ सकें, अच्छी तरह समझिए, एज पर द प्रोविजन उन्हें इंप्लीमेंट कीजिए और जल्दी से CA बन जाइए, सॉर्टेड। नेक्स्ट इज नैन्सी सक्सेना सेइंग ब्लॉक ऑफ एसेट में पार्ट गेन और लॉस वाला। ब्लॉक ऑफ एसेट में बहुत ही सिंपल है नैन्सी, सेम प्रोविजन है, देयर इज नो डिफरेंस। आप देखिए कोई डिफरेंस ही नहीं दोनों प्रोविजन में, ऑलमोस्ट सेम। सारा ब्लॉक बेच दिया, सेल कंसिडरेशन, ओपनिंग WDV, एसेट परचेज, घटा दीजिए आंसर। सारा ब्लॉक नहीं बेचा, जितना बेचा है उतना। इसमें अगर गेन आया तो हम कैपिटल गेन में लगाएंगे, अगर लॉस आता है तो उसे हम हटा देंगे, लिख देंगे कैपिटल लॉस नॉट एप्लीकेबल, ट्रीटमेंट होगा उसका PGBP में। इतना सिंपल, सबसे सिंपल प्रोविजन सेक्शन 50 है। ओके ओके, मिस्टर राहुल जैन इज आस्किंग, sir, when one or more asset is sold and there is STCG in current previous year, now the next previous year the value of asset is zero, but we have the remaining asset in that block, then how it would be treated, as we cannot claim the DAP. So in case we have sold that asset, then whole amount will be income from other source. You will, if you sell that asset, that will be full value as capital gain, because you do not have any opening value. That cannot be other source income. Whenever you will sell the practically asset from that block, that will be your capital gain in the same scenario. Sale consideration will be there, but their opening or actual cost will be zero. That will be your capital gain, not your income from other source. Okay. So moving on to one very important provision. I always say for every provision because everything is important. Okay. Because we are doing CA, not BA. So slum sale, meaning of slum sale. The slum sale means when any business transfer it undertaking, full unit, full department for a single consideration. That is called slum sale. Let me tell you this in Hindi also because its language is quite complicated. कभी अगर ऐसा है कि आपका बिजनेस है, उसमें 4 यूनिट है, वी हैव 4 यूनिट्स इन योर बिजनेस, फाइन, वन इज पेट्रोकेमिकल डिवीजन, लाइक टेक्सटाइल डिवीजन, लाइक एटसेट्रा एटसेट्रा, और उसमें से हम एक यूनिट को, पूरे एक डिपार्टमेंट को, if we convert that single department into a new company, that is demerger. We are not talking about that. So if we convert any of the department into a new company, that is demerger. Okay. Slum sale is different. Slum sale says sale. Slum means lump sum. Slum means lump sum sale. It says if उसी केस में अगर हम अपनी यूनिट को, if we sell one unit, one department for a single consideration, that is called slum sale. Why? If we have an undertaking, any department like textile department, and I want to sell it, I do not want to demerge it, I want to sell it. So we can sell it like this. Machine we can sell separately, building and land we can sell separately, furniture we can sell separately. So that will be the separate capital gain of those assets. So in which those depreciable will be calculated as per depreciable capital gain method. Land is non-depreciable, we will calculate the capital gain as per normal non-depreciable provision. So this is a normal separate asset consideration and capital gain provision what we are discussing in capital gain from starting. Slum sale say no, we are not going to sell it like this. Individual assets will not be sold off. We will sell the full undertaking, full unit for a single value. We will say, give us 5 crore and this full unit is yours, including furniture, machines, land, building, whatever it is. Full unit has been transferred for a single value, for a single consideration. There is no individual asset consideration has been there. So if any unit, any undertaking, any department is going to be transferred like this, that for a single consideration, that is lump sum consideration, that will be called slum sale. So the definition suggested, it means that transfer of one or more undertaking as result of the sale for a lump sum consideration. The main sentences without values being assigned to the individual liabilities and asset. So if the value has been assigned individually, in that scenario, if the value has been assigned individually, in that scenario, that will be individual asset sale and purchase. That is not a slump sale. That is a normal case what we were discussing, like machines sold separately and anything else has been sold separately, building sold separately. But if the full unit has been transferred for a single value, that will be called slump sale, in which the consideration is fixed for the whole undertaking and will be received by the transferor. Now, in this case, you can see three conditions should be fulfilled: transfer of one or more undertakings for lump sum consideration with no values attached to particular asset. How we are going to solve it? Suppose there is ABC Limited having three different units of business. So they decided to transfer this unit for a single consideration, suppose rupees 200 lakh, including all building, land, machine, furniture, whatever it is. There is no single transaction, it's a lump sum transaction. So that is called slump sale. Now the problem arises, for the purpose of calculation of capital gain, we need certain things like period of holding. Clear? We need sale consideration. We need cost of acquisition, or we can say cost of improvement. We need index. If it is long term, then we need index for the purpose of indexation. So basically, we need these four things generally. Now the problem is this: if you are transferring this unit for a single transaction, single value, so there will be different kind of plant and machineries, furniture, building. We have multiple kind of furniture also there, multiple type of plant and machinery there. Some might be long term, purchased 3 years before. Some might be short term, long term, short term, long term, short term, long term, depends. So when we transfer all these assets for a single value, then for the purpose of capital gain, how the period of holding will be decided? Because individually assets can be short term and long term, but we need to calculate the gain. So for the purpose of capital gain calculation, what will be the period of holding? The answer says it depends upon the undertaking, which unit you are transferring. If undertaking is working more than 36 months, then the gain or asset will be long term. If it is up to 36 months, if the undertaking is more than 36 months old, it will be long term. Up to 36 months, then it will be short term capital asset. So this is sorted. How we will find the period of holding? It depends upon how old the business unit is. Whether the company is 10 years old, but unit is 2 years old, so it will be a short term, 24 months. Okay. Now the second question is, what will be the sale consideration? That will be given in question. So that will be given in the question. So sale consideration problem has been sorted, solved. Now the problem is cost of acquisition and cost of improvement. So individually, assets must have separate cost of acquisition, separate cost of improvement, separate date of purchase. So problem of indexation will also arise, that if it is long-term capital asset, then how we will index the assets individually? There might be some depreciable asset, there might be some non-depreciable asset, there might be some non-depreciable long-term, non-depreciable short-term. So how indexation will also done in case of long-term? So the problem has been solved with a very easy provision. It says you not need to calculate any index cost of acquisition. There is no indexation concept applicable in case of slump sale also. So there will be always normally cost of acquisition or cost of improvement. And how we will find out? It says the net worth of unit. You have to calculate the Net worth. Net worth of the unit will be the cost of acquisition, cost of improvement, index cost of acquisition, index cost of improvement in aggregate. That's it. So technically, you can see calculation of period of holding is so simple. And if we know how to calculate the net worth as per the accounting provision, total of asset minus long-term liabilities minus the capital, that will be my net worth. So we need to know how to calculate the net worth. Whatever will be your net worth, that will be your cost of acquisition or cost of improvement, including everything. That need to be deducted. This will be your answer, whether long term or short term, whether capital loss, whether capital gain. So the most important thing in to solve a question of SILAM sale is how to calculate the net worth. We have the calculation or example also for this, so do not worry. Let me take the queries or we can do this. There is no more query. Okay, so there is no more query. So we are going for a break for 10 minutes and then when we will be back, we will discuss the example and I will explain you how to calculate the net worth also. So see you after 10 minutes. Take your tea, coffee, etc. So Manish ji, can we go for a break? Hey, welcome back, everyone. So I believe that you must have your tea, coffee, etc. So we were discussing provision. Let me tell you, it's very easy provision because period of holding is based upon the undertaking, cost of acquisition, cost of improvement, index cost of acquisition, etc. That is our net worth, what we need to calculate. Let me see if there's any query. Mr. Manohar Yadav is saying, Sirji, what if there is any revaluation in depreciable asset, we consider them or not? If yes, then how we will treat them? Do not worry, we have the example in which there is revaluation reserve also. So if there is any revaluation reserve has been created, that has to be deducted before considering that asset into our net worth. So we have the provision for that also. Okay. So it's a story time and I hope थोड़ी बात कर लेते हैं. आप लोगों की पढ़ाई अच्छी चल रही होगी एंड लॉ भी आई गेस आपकी अच्छी चल रही है बिकॉज आई गेस आप सुदीप जैन सर पढ़ा रहे हैं एंड ही इज माय बेस्ट फ्रेंड एंड बड़ी कमाल की बात है, ही इज माय नेबर आल्सो. सो आई गेस अभी ही वाज टीचिंग LLP, I guess. So there was Tenali Raman story. He told you. So he's a very good faculty and you must have enjoying his classes. तो अपनी स्टोरी की बात करते हैं. आज की स्टोरी एक बहुत ही सिंपल स्टोरी है और एक छोटा बच्चा था जो एक स्कूल में पढ़ता था कोर्स और रेगुलरली स्कूल जाता था, पढ़ाई होती थी. एक दिन स्कूल वालों ने से एक लेटर लिख कर दिया, एक एनवलप में डालकर, और उसको बोला कि ये लेटर अपनी मदर को दे दें. तो वो घर आया, उसने बोला मम्मी मुझे स्कूल से लेटर मिला है और ये आपके लिए. उसकी मम्मी ने लेटर पढ़ा एंड व्हेन शी वाज रीडिंग दैट लेटर शी स्टार्ट क्राइंग. एंड उस बच्चे ने पूछा कि स्कूल से क्या लिख कर आया है मम्मी. तो उसने बोला कि उन्होंने लिखा है कि आपका बच्चा बहुत होशियार है, वो हमसे ऐसे क्वेश्चंस पूछता है जिसके हमारे पास आंसर्स नहीं. तो हमारे हिसाब से जो हमारा स्कूल है बहुत छोटा है एंड माइट भी उसको एक किसी बड़े स्कूल में आप भेजिए जहां पर उसका और डेवलपमेंट हो पाए, या उसे अपने घर में ही ऐसी एजुकेशन दीजिए जिससे कि उसका फ्यूचर ब्राइट हो पाए. बच्चे को सुनकर बहुत अच्छा लगा. उसको लगा वाह, मतलब मैं इतना होशियार हूँ कि मेरी मदर को इतना प्राउड है मेरे ऊपर. तो उसने कहा मैं और मेहनत करूंगा. और सच में मेरी मम्मी, उसकी मदर ने उसे बोला कि बेटा आई एम वेरी प्राउड ऑफ यू कि तुम इतने होशियार हो, तुम इतने इतने समझदार हो. तो हमें अब स्कूल वाले तो नहीं पढ़ा पाएंगे, तो मैं तुम्हें पढ़ाऊंगी. तो हम फिर देखते हैं पढ़ाई का क्या हो सकता है. तो धीरे धीरे करके उस बच्चे को पढ़ाया उसकी मदर ने. वो बड़ा होकर बहुत बड़ा साइंटिस्ट बना. आई गेस हिज नेम वाज एडिसन. एंड जब उनकी मदर एक्सपायर हुई तो मदर का सारा सामान एक जगह रख रहे थे और उसमें से वो लेटर उन्हें मिला जो तब बचपन में उनकी मदर ने पढ़ा था. और वो लेटर उन्होंने निकाला. उस लेटर में लिखा था कि आपका बच्चा जो है वो हमसे बहुत ही बेवकूफी भरे सवाल पूछता है स्कूल में और हम उसे अपने स्कूल में नहीं पढ़ाना चाहते. और ये प्लीज इसको अपने घर पे रखिए और इसे किसी भी स्कूल में मत भेजिए बिकॉज कोई भी स्कूल इसको एडमिशन नहीं देगा. तो जब वो लेटर उसने पढ़ा, एडिसन ने, उन्होंने पढ़ा एडिसन ने, तो ही स्टार्ट क्राइंग. उन्हें समझ आया कि उनकी मदर ने उन्हें उस टाइम झूठ बोला था. एंड यू नो व्हाट हैपेंड, जस्ट कि उनकी मदर ने उन्हें एक कॉन्फिडेंस दिया कि स्कूल वालों को ट्रस्ट है कि आप बहुत होशियार हो, मुझे भी ट्रस्ट है कि आप बहुत होशियार हो. तो उस ट्रस्ट के बेस पर वो पर्सन कितना मोटिवेट हुआ कि वो बच्चा बढ़ते बढ़ते एडिसन बने. तो इन द सेम वे लाइफ में जो लोग हम पे ट्रस्ट करते हैं और अगर हम उनकी अच्छी बातों से मोटिवेट हो सकते हैं, तो सिर्फ एक वो मोटिवेशन एक सिंपल चीज है जो हमें कुछ भी करने के लिए वो विल पावर देती है कि हम अपने लाइफ में अपने गोल्स को अचीव कर पाए. तो जहां से भी आपको लोग अच्छा मोटिवेशन देते हैं, ऐसे लोग जो आपको अच्छी तरह मोटिवेट कर सकते हैं, चाहे वो पेरेंट्स हो या ब्रदर या सिस्टर या दोस्त, प्लीज उनके आसपास रहिए, उनकी बातों को सुनिए. और ऐसे लोग जो आपको डिमोटिवेट करते हैं, प्लीज लीव देम, कोई फायदा नहीं. बिकॉज एक सिंगल सेंटेंस भी आपको वो कैपेबिलिटी, आपको वो एबिलिटी, आपको वो पावर देता है कि आप लाइफ में किसी भी लेवल तक आगे बढ़ सकते हैं. और इसी तरह जो लोग आपको डिमोटिवेट करते हैं, हो सकता है वो इतनी बुरी तरह आपको इफेक्ट करें कि आप शायद आगे ना बढ़ पाए. सो प्लीज स्टे विद दोज पर्सन रियली थिंक्स अबाउट यू.
So that was the story of Edison, and it shows that willpower, a correct kind of guidance, can make a normal child to an Edison. So in the same way, because if you have correct guidance, if you have correct motivation, then nothing is impossible. कुछ भी impossible नहीं. सब कुछ बहुत आसान. We have a brain which have a unlimited storage capacity. You might have see your laptop having 256 GB or 1 TB storage capacity, but we have some kind of hard disk that does not have any limit. It is unlimited capacity. It is free. You need not to rewrite it. You have a RAM. Your brain also work like a RAM also. And again, it's a infinite capability we have is a brain. You can remember multiple things. You can do multiple tasks. It's just how we train it. So if you are trained your brain properly, you are able to achieve anything. Like as the scientist says, we have that much power in our brain that we can learn every book in this world, in this whole world. Every book of this world can be learned by this brain, and that will be by word. You can learn that. किसी भी कितनी भी जितनी भी हमारे वर्ड में बुक्स हैं, हमारा ब्रेन उतना केपेबल है कि वो सब लर्न करके रख सकता है वर्ड बाय वर्ड. इट्स जस्ट अबाउट हाउ वी यूज्ड इट. सो अगर किसी का ब्रेन, अगर आप अपने दिमाग को ऑक्यूपाइड करते हैं ज्यादातर सोशल नेटवर्किंग में, व्हाट्सएप, फेसबुक, इंस्टाग्राम, रील्स एटसेट्रा, और घूमने फिरने में, तो फ्यूचर भी फिर वैसा ही बनेगा. फाइन. और अगर आप ब्रेन को ज्यादा फोकस रखते हैं पढ़ाई में, अपने करियर के लिए, अपने फ्यूचर के लिए, अच्छी चीजों से मोटिवेट होते हैं, तो वो फिर आपका फ्यूचर भी वैसा ही उसी हिसाब से बने. तो वट एवर यू आर डूइंग टूडे, दैट इज गोइंग टू बी योर फ्यूचर. टुडे थॉट फॉर द डे, वी मिस द थॉट फॉर द डे. That is the thought for the day. It says be stronger than your excuse. So you might have your excuse that why you are not able to study, why you are not able to clear your group, why you are not able to. So you can give the excuses, but please be stronger than your excuses. There's only one thing, that is your future, for what you are doing this. So please just leave the excuses, run on the right track, right path, focus, work hard, and definitely the goal is not so far. You are in the intermediate level, and that is final, and you will be a C. So whatever goal in your life is, you can achieve. Just stop giving the excuses. There might be problem in your life, in your personal life, in your academic life, etc. But you are the only one who need to solve it. Nobody else is coming to solve it. You have to solve it by yourself. Okay. So that was a small story, and it's a real story of Thomas Edison. Now we are moving on to our slum sale. Okay, Nancy asking one question. आप इतनी अच्छी स्टोरी लाते कहाँ से? यही तो प्रॉब्लम है. स्टोरी ढूंढने में मुझे ज़्यादा टाइम लगता है नोट्स बनाने से. इतना मुश्किल होता है इतने शॉर्ट टर्म में एक अच्छी स्टोरी. एंड मैं आपको बता रहा हूँ लिटरली, जितने भी दुनिया में बहुत बड़े बड़े लोग हैं ना, उनकी लाइफ में जो भी ड्रास्टिक चेंज है ना, जो भी चेंजेस हुए उनकी लाइफ में, वो बहुत छोटी चीजों से हुए. a one sentence, a one quotation, a one story, a one कोई मोमेंट ऐसा हुआ है that actually change the whole life. So लाइफ में जो बहुत बड़े बड़े लोग आपको मिलेंगे ना, if you will read their biography or their autobiography, you will see that उनकी लाइफ में जो चेंज हुआ है ना, जिस चेंज से वो फेलियर से सक्सेस में ट्रांसफर हुए हैं, whether it's गांधी जी, you might know the incidents of कि बहुत बड़ी बड़े इंसिडेंट हुए तब वो चेंज हुए. There's only one, might be one very small, short incident, might be some quotation, might be some thing which they saw in their life that actually changed a lot in their life, and actually they changed the world. So that's the power of these things. That the moment your brain start thinking differently with one story, even with quotation, and that way you can change everything in your life. So moving on to our, of course, slum sale provision. Capital gain in case of slum sale, we have seen that period of holding. How we will find the period of holding? If that undertaking is transferred before 36 months, short term, after 36 months, long term. So even if up to 36 months, it will be a short term. Okay. Kagesh, Kagesh Kumbabat. Sir, I am new today, but your class is best. Thank you so much. But please, Kagesh, please watch the capital gain lecture 1 or 2 also. So you will be able to understand the full provision. Okay. Yes, friend and neighbor. Yes, Sudeep sir is a friend and the neighbor also. Okay. So meaning of cost of acquisition and cost of improvement, the net worth of the undertaking or division on the date of transfer shall be the cost of acquisition and cost of improvement. No indexation will be done. Meaning of net worth, that means total asset minus current liabilities minus long-term liabilities minus miscellaneous expenditure, if any. A report of CA should be submitted to confirm that the net worth has been computed correctly. Now, this is the example what we were talking about, and we should read it first. Mr. A is a proprietor of Akash Enterprises having 2 units. He transferred on 1/4/2023 his unit number 1 by way of slum sale for a total consideration of 25 lakh. Unit 1 was started in 2005-6. So that is 3 years more. So that will be a long-term capital asset. Okay. The expenses incurred for this transfer was 28,000. So that need to be deducted as expense on transfer out of 25 lakh rupees. So balance sheet has been given over here. We have to find out the net worth out of this balance sheet for unit 1 only for unit 1. So you can see for the purpose of unit 1, we have to find out the building value. It says building is 12 lakh. Just a second. Okay, now it's nice. So building has been given in the question. We have to find the net worth, and for the purpose of net worth, sale consideration for the purpose of capital gain. It's a long-term capital asset. We have seen that. Sale consideration has been given 25 lakh. Less expense on transfer. That is 28,000. And now we have to find out the net worth. For the purpose of net worth, we have to calculate the value of asset and we have to deduct the liabilities out of it. So that was building 12 lakh rupees has been given for unit 1. But it says revaluation reserve. Somebody was asking the question what we should do regarding the revaluation reserve. So revaluation reserve is created by revising upward the value of the building of unit 1. Unit 1 has been transferred. So we are taking the value of building that is 12 lakh and revaluation reserve for building 1 unit has been given 3 lakh rupees. So the net value of building for the purpose of net worth we need to take is 9 lakh rupees. I hope it's clear. Then machine will include, of course, for the purpose of net worth value, 3 lakh has been given machine value. Then debtors 1 lakh rupees, of course, we need to take that. The other asset has been given 1,50,000, but there is a point that says other asset of unit 1 include patents, which has been purchased on 1st July 2021 for 50,000, on which no depreciation has been claimed yet. So other than patent, if we'll say other assets are 1 lakh, because out of this 150, 1 lakh is for other asset and 50,000 for patent, on which depreciation has not been claimed yet. So we have to take the value of patent after claiming 2 years depreciation on it. Patent is an intangible asset, and on the intangible asset, the depreciation rate is 25%. So if the patent value is 50,000 and we will charge depreciation for 2 years, because 1st July 21, then 21-22 depreciation at the rate 25%, that will come 12,500. Remaining value will be 37,500. So that will be the debt for 22-23. One more time, that will come 9,375. So after debt, the patent value will be 28,125. Clear? Now we have to deduct the value of bank loan. The bank loan has been given, that is 2 lakh rupees, which is 70% for unit 1. So that is going to be deducted. Long-term liabilities and current liability need to be deducted for the purpose of calculating the net worth. That will be 1,40,000. And the creditors, which is says out of this 150, 25% is for creditor. That means 37,500. So after deducting all these, my net worth will be 1,250,625 will be the capital gain. Net worth will be, you have to calculate the total. So net worth will be that. My capital gain will be 1,250,625. Let me see. The calculation is over here. You can see the net worth will be, the net worth is 1,250,625, the total of this, and the capital gain will be 1,221,375. Yes, okay. So you can see sale value 25 lakh, expense on sale is this one, net sale consideration, then the net worth is 1,250,625. As we calculated, the details has been given here under also, and the long-term capital gain will be 1,221,375. So building 9 lakh, machine 3 lakh, debtors, patent, how we calculate the depreciation, you can see the note also. Other asset is 1 lakh, creditors 25%, bank loans 70%. That is how we find the net worth. This is the patent provision. The cost as on 21-22 depreciation, then 22-23 depreciation, 21-22 depreciation. The remaining value will 28,125. Clear? Indexation benefit cannot be claimed whether it's a long term or short term in case of slump sale. Okay, now computation of capital gain in case of non-resident. It's a very simple provision again. In case of non-resident, capital gain from the transfer of shares or debenture of an Indian company shall be computed in foreign currency initially utilized for the purpose for the purchase of such share or debenture. So if any non-resident purchase any shares or debenture of an Indian company in foreign currency, he used foreign currency to purchase any shares or debenture of an Indian company. Then at the time of sale, because he purchased that shares or debenture in foreign currency, so at the time of sale, we have to calculate the capital gain also in the foreign currency only. So when we will apply this foreign currency provision, when the seller is a non-resident, he purchased Indian company share or debenture, and that is purchased in foreign currency. Then at the time of sale, whether he is selling that shares or debenture in Indian currency, but because at the time of purchase he used the foreign currency, so we have to calculate the gain also in foreign currency. The full calculation will be done in foreign currency. How we need to calculate that? Very easy and simple provision. So condition need to be fulfilled. There must be a non-resident. He purchased Indian companies shares or debentures, and he used foreign currency for the purchase of shares or debenture. Clear? If it is these conditions is fulfilled, then by the time of sale, we have to calculate the capital gain also in foreign currency. Now the period of holding concept will remain the same, normal. The sale consideration will be given in question in INR. That means in Indian rupees. We have to convert it into the foreign currency, suppose in dollars. So the question will suppose give the INR value, that is 9 lakh rupees is sale consideration. We have to convert this into dollars. So for the purpose of conversion, they will provide us the foreign currency convertible rate, that will be called TTBR and TTSR. Telegraphic transfer buying rate, telegraphic transfer selling rate. It's a rate of buying and selling from the point of view of RBI. That means RBI purchase foreign currency on which rate is called TTBR. RBI purchase sell the foreign currency on which rate is called TTSR. We have to calculate the average of TTBR and TTSR by following this formula at the time of transfer. So at the time of sale, the Indian currency value will be given, and at the time of sale, TTBR and TTSR will also be provided in the question. Suppose it's 89 and it's 91. So that means average will be 90. So I have to convert this 9 lakh rupees into foreign currency with average of TTBR and TTSR. That will be $10,000. That will be my sale consideration. Less cost of acquisition will also be Indian currency. Suppose 7,50,000. It has been purchased and the purchase date will be given in the question. Now this need to be again converted into dollars by using average of same TTBR and TTSR, but for the date of purchase. So purchase date TTBR and TTSR will also be provided in the question. So how we will find the average? Divided by 2. So whatever will be the value average, we need to convert this with the help of this average. So suppose it comes $9,000. Suppose, fine. Then the gain will be $1,000. Whether it's long term or short term, indexation not applicable in this case also. If the calculation is in foreign currency, there is no indexation in long term. So whatever will be your answer, that will be in dollars. Now we need to convert it into Indian rupees because tax need to be paid in Indian rupees. So now we have to convert the capital gain into Indian rupees. And for the purpose of conversion, the selling date, the date of transfer, the selling date TTBR need to be multiplied. We have to multiply it with the TTBR, which is 89 rupees. Selling date, transfer date TTBR need to be applied. Why? Because we have $1,000. We have to go to the RBI to sell it. So RBI going to buy it. So that's why we need to multiply it with the TTBR, because I am going to sell these dollars to the RBI. So RBI, what RBI is doing? RBI is purchasing. So which rate will be applicable? RBI buying rate need to be multiplied for the purpose of converting them into Indian rupees. So all dates TTBR, TTSR will be given. You just need to calculate the average. And by applying the average, we have the gain, sale consideration and purchase, etc. in dollars or the foreign currency. Then we will have our gain in foreign currency, and for the purpose of solution or answer, we have to reconvert it into the rupees, and you have to multiply with the selling date TTBR. So we will find out the gain or loss in foreign Indian currency. The provision has been written over here like very simple. Cost of acquisition need to be converted average of TTBR, TTSR at the date of acquisition, of course. Sale consideration and expense on transfer need to be converted with the average of TTBR, TTSR at the date of transfer. Purchase, average of TTBR, TTSR date of purchase. Sale is sale. Capital gain in foreign currency need to be converted by applying TTBR at the time of transfer. Sale date TTBR. No indexation will be done. TTBR full form, telegraphic transfer buying rate. TTSR, telegraphic transfer selling rate. These rates are from the point of view of RBI. You can see the question. NRI remit $40,000 remit on 16/9/2020. Amount used partly in purchasing security in India on 3rd October 20. So date of purchase is 3rd October 20. 10,000 share at 12 rupees per share. These are sold at 36 rupees each on 30th March 24. So you can see remit date TTBR, TTSR, purchase date TTBR, TTSR, sale date TTBR, TTSR has been given. Remit date is irrelevant. That is just to confuse you. So we do not need to do anything with the remittance date. Calculate capital gain. Period of holding, long term of course. Sale consideration is 3,60,000 and the TTBR, TTSR average will be 45, that is $8,000. Cost of acquisition 120. TTBR, TTSR at the date of purchase is 20 average, 6,000. $2,000 multiplied with the TTBR of date of sale. So that will be my capital gain answer. I hope it's clear. Simple.
No more exemption for the capital gain arising from listed equity share. So I have uploaded a chart of cost of acquisition. I guess on we discussed the cost of acquisition provision on the first session in which I uploaded the chart. Just a second. Okay, so that was the chart I have uploaded for the purpose of calculation of cost of acquisition in case of capital gain. In which you might have seen that in the case of shares, there is star sign, and this is the note number 2. It says special provision cost of acquisition for long-term equity shares or equity oriented fund or bonus share. There are some special provision. Generally, we find out the cost of acquisition in case of shares, bonus share, ordinary shares, like the diagram. But there is some specific provision also made if the shares has been allotted or acquired before 1st February 2018. So if any equity share long term or equity oriented fund or bonus share has been acquired or allotted before 1st February 2018 and on which STT has been paid, security transaction tax has been paid, then we have the separate specific provision regarding it. And I have mentioned also, refer page number 38 from notes part 1. So that is what we are going to discuss now, the special provision regarding it. This is page number 38. And this is the provision I was talking about. This is also mentioned over here also. The format for cost of acquisition also I told at that time that we will discuss this provision in detail later, page number 38. So let me tell you where it was. There is a format for capital gain. You can see the highlighted part is this point regarding the bonus share. It again says the same thing as the chart, that bonus share allotted before 1st February 2018. So I have told you that we will discuss this provision in detail later. Again, this also talking about the same thing. This is something different. This is not related to it. So these points we are going to discuss now in detail on page number 38. So whenever you will read page number 38 provision, what we are going to discuss right now, you should understand that that has been already we discussed in chart as well as on that format also. This is the provision, and it's for those cases in which the equity shares has been transferred or bonus shares has been transferred or equity oriented fund has been transferred and it has been purchased before 1st February 2018. So if these equity shares, with the help of a diagram, I've also made a prescribed diagram for it. This is the main diagram analysis. You can understand the full provision only with the help of this diagram also. It says equity shares equity shares if STT, security transaction tax on purchase and transfer both. So those equity share on which STT has been paid at the time of purchase and transfer both. For those equity share plus EO funds. EO funds means equity oriented funds on which STT has been paid on transfer. So if these equity shares or equity oriented fund is long-term capital asset, if these are long-term capital asset, then this provision is going to be applicable. If this is short-term, if this equity shares or if these equity oriented fund is short-term capital asset, then they are going to fall under section 111A. Always and entirely
at what is the tax structure that will be discussed later. So if these are short-term capital asset, then these provision will not be applicable. These special provision will be applicable only if these equity shares or equity oriented fund is a long-term capital asset. So if it is a long-term capital asset and it transfer up to 31st March 18, because 31st March 18 has been expired. Of course, it's an old date. At that point of time, these kind of long-term capital gain were exempted under section 1038. So that is not relevant for now because this provision was applicable up to 31st March 18. That means assessment year 18-19. We are in now assessment year 24-25. So this is for just knowledge. You can skip this concept. You can only learn now this concept, that if any long-term equity shares on which STT has been paid at the time of purchase and sale both, and if there is any long-term equity-oriented fund on which STT has been paid on transfer, and if these are transferred on or after 1st April 18, again this is the date is irrelevant because this was relevant when this provision was there. So now you can understand that if these kind of asset has been transferred, then 10% need to be paid as a tax under section 112A. You have to tax it at 10% rate. Calculate long-term capital gain without index. There is no indexation benefit if it is a equity shares on which STT has been paid. If it is an equity oriented fund and if it is long-term, then there will be no indexation and there is a separate exemption of 1 lakh rupees there. Up to 1 lakh rupees long-term gap gain will be exempted. Balance is going to be taxable only. That is also at the rate of 10%. These rate 10%, 15% will be discussed in detail in part 2 of the capital gain. For the time being, what we are discussing? We are discussing that if any we are discussing the cost of acquisition. Cost of acquisition is special provision. And these special provisions are for equity shares on which STT has been paid at the time of purchase of these shares or at the time of sale end, plus equity oriented fund on which STT has been paid at the time of sale. And if these are short-term capital asset, then the treatment as per normal under section 111A and tax will be charged at the rate 15%. There is no special provision applicable. But if these are long-term capital asset, if purchased before 1st February 2018, clear? In that situation, no indexation will be done, plus 1 lakh rupees exemption, plus under section 112A, tax at the rate 10%. Generally, long-term capital gain have 20% rate of tax, but because of these special condition, you will not get the benefit of indexation, 1 lakh rupees exemption, and if these securities are there, then tax rate will be 10%. But we are technically finding out how to calculate cost of acquisition in this case. For whether it's a bonus shares or equity shares, how to find the cost of acquisition, like no indexation, 1 lakh benefit, 10% tax rate. That will also be discussed in part 2 in detail. This will be discussed in part 2 in detail of capital gain. For time being, you should focus on only this provision, that if there is any equity shares on which STT has been paid, purchase and sale time, if it is equity oriented fund, STT has been paid at the time of sale, if it is long term. Then cost of acquisition like this if it is long term and purchased before 1st February 2018. If it is purchased after 1st February 2018, then there will be normal purchase price will be your cost of acquisition as per the chart. So if it is purchased before 1st February 2018, then cost will be find out as follows. The provision says how we need to find out the cost. Point 1 says take the actual purchase price. Again, how we will find out the actual price? If these shares has been purchased before 1/4/2001, 1/4/2001 also before 1/4/2018, so actual price will be find out as per the provision that if it has been purchased before 1/4/2001, then we will take the FMV as per the diagram. If it is before 1/4/2001, then FMV on 1/4/01 or purchase price, whichever is higher, of course, your purchase price. If it is on or after 1/4/01, then the purchase price will be your purchase price. So that will come at the place of actual price. So if it is before 2001, then we have to find out as per the diagram provision. So that will be called the purchase price. That is not new. The second point is new. The second point says, now take the sales consideration. At the time of sale, what is the sale consideration? That value or FMV on 31st January 2018. That will be given in question. This is new. And now whichever is lower, take that value. Understand? Sales consideration that will be given in question and FMV on 31st January 2018. You have to take those value and the lower. This lower need to be compared with this actual price, whatever it is. This lower will be compared to the actual price, what you will find out like this. Because in this case, higher, in this case, purchase. So that actual price, whatever it is, or lower of this one, whichever is higher will be your cost of acquisition for calculating the capital gain. Understood? So if there is long-term capital asset, if it is purchased before 1/4/2018, then we have to find the cost of acquisition as follows. We have to find two values. First is actual price. So actual price need to be calculated as per the diagram. If it is before 1/4/2001, then we have to take the actual price, FMV on 1/4/01 or purchase price, whichever is higher. If it is on or after 1/4/01, then the actual price will be the purchase price, whatever it is, that value will come over here. Then the other value, this is new. This is discussing. This is new part. This is general part as per the cost of acquisition chart. So this is new. It says whatever is the sale consideration and FMV on 31st January 18, whichever is lower, you need to take this also. Now this actual price or this lower, the higher will be your cost of acquisition. Do not worry, we have multiple example for this. You can see the format has been over here. If purchased before 1/4/2018, cost of acquisition higher of actual purchase price. So actual purchase price will come as per the chart or lower of FMV on 31st January 18 or sale consideration. So lower of these two or actual purchase price, whichever is higher of 1 and 2, that will be your cost of acquisition. If these securities has been purchased on or after 1st February 18, then the cost will be your purchase price actual. There is nothing to bother. FMV, how we need to find the FMV, that will be given in question. You can read the provision. We have the questions, what I need to solve. These are the different scenario. Now see. Scenario 1. Sales consideration has been given in question, 1 lakh rupees. Date of sale is 31st March 24. Actual cost of acquisition is 8 lakh. Date of purchase is before 1st February 2018. This date is relevant. So now we have to calculate the cost of acquisition as per the special provision we have. And it says we need to take the actual purchase price, that is 8 lakh has been given. Now we have to find the lower of actual consideration or FMV on January 2018. Lower of these two, 10 lakh or 850, whichever is lower is 8,50,000 is lower. And now the actual cost or lower, whichever is higher. So that will be your cost of acquisition. That means 8 lakh or 850, whichever is higher, that is my cost of acquisition. In the second example, if you'll see in the second example, again the sale consideration is 10 lakh, date is sale is this, cost of acquisition 8 lakh, date of purchase is, so specific provision applicable. Now the actual cost of acquisition 8 lakh. We have to calculate from this and this, lower of 10 lakh or 750. So 750 my lower value. Now this lower or actual consideration, whichever is higher. So this is my higher value, that is my cost. Simple. Again in this situation, same provision applicable. Again, the actual price is 8 lakh. Now the FMV is 9 lakh and sale consideration is 10 lakh rupees. So whichever is lower is 9 lakh is my lower. Now 9 lakh or 8 lakh, whichever is higher. 9 lakh will be higher, that will be my cost. Now in this case, 8 lakh is my actual cost. Now the 11 lakh is FMV and 10 lakh is the sale consideration. So lower will be 10 lakh. Now 10 lakh and 8 lakh, whichever is higher. So higher will be 10 lakhs. So my cost is 10 lakh rupees. Now in this case, you will see the date of purchase is on or after 1st February 2018. In all these cases, this is before. So this is normal case. This is not a special case. In normal case, it says what will be the cost. The purchase price will be the cost. There's nothing lower, higher. What is your actual cost of acquisition? That will become your purchase price to solve the question. Now you can see these are the deemed cost of acquisition in all cases. So we have the capital gain, and after that we solve that for the capital gain, sale consideration minus no indexation will be done because special provision applicable. No indexation is going to be done over here. Fine. Now in this case, I guess there must be a clarification. In this case, there must be indexation need to be done. This is wrong. I will solve it again. Indexation need to be done because the special provision is not applicable. We are solving it as per normal provision. So if we are solving it with the normal provision, then indexation need to apply. Okay. So we just need to understand till here provision. Leave these provisions. We just need to understand how to find out the cost of acquisition in these cases. So theoretical provision has been over here. You can read the theoretical provision out of these concept. You just need to understand how to find out the cost of acquisition. Only this D point you need to find out. The exemption of 1 lakh rupees, tax rate is 10%, 15%. Do not bother about it. We have the detailed provision in part 2 of capital gain regarding all these provisions. These are theoretical provision. Again, this adjustment of unexhausted basic exemption limit, 10%, rebates, deduction. I will discuss all A, B, C point in our assignment number 2 in detail when we need to calculate the tax on long term or short term. Okay. We have the last provision over here, that is deemed full value of consideration for computing capital gain under section 50C, 50CA, and 50D. And I believe that you might remember that in the PGBP head, we have discussed a section that is section 43CA. Let me show you. And I have told you that at the time when we will discuss section 50C, that when we will discuss section 50C, we will not discuss because the similar provision we are going to discuss under section 43CA. And this is the time when there are section 50C and the similar kind of exactly same provision we have already discussed in section 43CA. In our, I guess, PGVP assignment number 3. Let me show you that screen so you will recall the provision, because we are exactly discussing the same provision under section 50C. 50CA is different, but 50C is the same provision. So once you will see that provision in PGVP head, you will recall the provision, and you will recall that I said that we will not discuss this provision under capital gain, because exactly the same we are going to discuss here under PGVP section 43CA. That was on page number 116. Just a second. So this was the provision under section 43CA under PGVP head. These has been discussed in detail with example, I guess 4 or 5 example also. And you can see it has been written over here also that section 50C is applicable to capital asset as well as 43CA. What was the connection? That if the building, land and building, your immovable property, if stock in trade, then the sale consideration will be decided as per section 43CA. And if it is your capital asset, then the sale consideration will be decided as per section 50C. But the provisions are exactly the same. There is no difference. So exactly the same provision, we are going to see almost the same example also has been explained in capital gain. So this is section 50C under capital gain, exactly the same provision. It says when you are transferring your land and building, and if the stamp duty value is exceeding 110% of sale consideration, then higher will be your sales consideration. In that case, there was a concept of date of agreement also. If at the time of date of agreement, date of transfer is date of registry, but date of agreement is preceding to the date of registry. So if at the time of date of agreement, the payment has been whole or in part has been given via check, then in that case, the stamp duty value will be taken as on the date of agreement. So these provisions are copy paste with the same example also copy paste. So you can go through the section 43CA. If anyone of has joined today classes but did not watch the PGVP classes, so you have to watch the PGVP classes section 43CA. I guess in the third session or fourth session it was there. I guess fourth session. Yes, the fourth session of PGVP. You can go and watch section 43CA. Then you will see that section 50C is same, copy paste. The new point is section 50CA. 50C is same. 50CA again, one-liner provision. Unquoted share, that means unlisted share. If consideration received or accruing as a result of transfer, suppose in case of unlisted shares, it says in case of unlisted share, what will be the sale consideration for the purpose of capital gain? So the provision says the FMV of the unquoted shares or the consideration received, whichever is higher will be your sale consideration. So suppose the FMV of the unquoted shares are 10 lakh rupees and we transferred these unlisted shares for 8 lakh rupees. Then for the purpose of capital gain, the sale consideration will be 10 lakh. Clear? This is FMV. This is consideration received. Suppose if FMV is 9 lakh and consideration received 10 lakh, then whichever is higher is sale consideration will be 10 lakh. So it's a simple one-liner provision. Nothing to discuss in detail, of course. Very simple. And the last is section 50D, which says where the consideration received or accruing as a result of transfer of a capital asset by an assessee is not ascertainable or cannot be determined. So if there is any consideration for which the consideration cannot be ascertainable, in that case, the FMV of the said asset on the date of transfer will be the sale consideration. So if there is any situation in which there is consideration, but the value of that consideration we cannot ascertain, in that situation, the FMV of the asset will be taken as the sales consideration. So out of the section 50C, 50CA or 50D, we explained only 50CA and 50D because 50C is same as per section 43CA of PGBP. So I always say revise twice. That's my advice to make you wise. Let me take some queries. We are not able to solve the, or we can solve the questions of MCQ. Let me see. Okay. Story has been done. Sir, you are from Agra. Yes. Sir, I am new today. Okay. Teaching. Okay. Suman Goyal, sir, you are right. Changes happen in small things. Someone told me once, if you think you can, you definitely can. If you think you can, you are halfway of doing something. So if you believe that you can do something, then it means the half of the journey has been completed without doing anything. Just to, you should have the confidence that yes, I can do that. So your half work has been done. Okay. Where by these notes, this is on BOS application, ICAI BOS knowledge portal. You can log into the knowledge portal. You will get all the notes from there. Okay, Nagarju is asking, sir, as per income tax, WDV 500 lakh rupees, as per books, WDV 540. While calculating net worth, what we have to do, there is a question in May 2018. We have to take the value as per the provision that has been given in the question. So whatever the value has been given, you have to consider that for the purpose of net worth calculation. Notes I told you will be on BOS application. Unlisted shares में cost of acquisition में index apply होगा. Yep, yes, if it is long term, then cost of acquisition में indexation करना पड़ेगा. Next is we have MCQ also, but I don't think so. We do have time for that. So we will solve the MCQ in the next lecture in the starting only. So please work hard, be focused, be sincere, and पढ़ते रहो and बढ़ते रहो. So we will see you on the next session, which will be on Tuesday. I guess that is on 19th of December. So till that, have a good day. Take care of yourself, study hard, and be a chartered accountant. And one day we will meet definitely. Okay. So good day. Manish ji, can we close the session?